And as it goes down, it will take more and more snow. And when it comes down, it becomes a larger snowball. So if this effect has to happen, you need to start at young age. Young age, if we say like Warren Buffett started at the age of 12 years, many of us are not 12 years old, but whatever is your age, I think it is the right time to invest. And how to invest, what to invest, all that we will try to cover some of the things. We may not be able to cover everything. Then what you should invest, spend after investing and not invest after spending. That is what again Warren Buffett said. So you have to decide that I am going to invest 20, 30, 40% of my income, and the rest you can spend whatever you decide, rather than that I spend entire sum this month and I can't invest. So that's not correct. So continuation of the myths of financial planning. Is it one-time exercise? No, goals keeps on changing, and even the planning has to be changed accordingly. So depending upon your goal, you have to plan investments. Life insurance takes care of all kind of financial planning. Again, that is a myth. So remember to separate out life insurance from the wealth creation. What you invest in life insurance will earn 6 to 7% of per year. So that is meager, and you should create wealth. So suppose you have to buy the life insurance, just buy term insurance, and don't cover term insurance with wealth creation. They are two different things. Planning needed only for investing in equity market. Again, that is a myth. There are multiple ways you can invest, and you need to think, give a thought, and at each and every stage it will be different. For an example, if you need a money within few months from today, you can't enter in the equity market. If you are going to invest in equity, we say that minimum 3 years horizon should be in the because that suppose you invest today and you want money after 3 months, the market may go down. So you may have to come out of the market at losses. So if you want to keep this for longer duration, then equity market is the correct way. Risk comes from not knowing what you are doing. That is again what Warren Buffett said. So you need to understand what you are doing and then only invest. Don't do without that. So what are the investment options? And this is a very important slide because you need to understand this, and then you will know what is best for you. What is good for you, what is good for me, what is good for third person, it is all different. You need to understand your mindset and then invest. What I am doing, I may be 100% in equity as of 60, but others may not be comfortable. So each and every individual is different, and depending upon your thoughts, depending upon your risk-taking capabilities, you need to plan your investment. So that is what we call asset allocation and other things, which I may not be able to go into the details of that. But remember, each individual is different. Each individual will have different goal setting, and accordingly you will invest. So what are the different ways of investments? So one is, let's say, securities. Securities include stocks. And in stocks, there are whatever profit you make, it will have long-term capital gains or short-term, which is changed now from 10. Now the long-term capital gain is 12.5%. That is the tax you will have to pay to the government. And short-term, which used to be 15%, is now 20%. Then you can invest in bonds. Now, when you are investing in bonds, it means it is a fixed sum which they are going to pay you, like 9%, 7%, 8%. But you need to remember, if you are investing in bonds, it depends on the interest cycle. So if the interest is going to drop, your bond value will increase. Now, you may not understand, many of you, what exactly it means. But remember, bonds investment is linked to the interest cycle. If interest is going to drop, your bond NAV will increase. And if it is traded in the stock market, The price, if you have bought at 1,000 rupees, it may increase to 1,050, 1,100, 1,200, depending upon fall in the interest rate. And you can invest accordingly, you can plan. So right now, if you think interest rates are going down, one may invest in bonds. Then mutual fund. Mutual fund, if you don't have time, if you don't know how to invest in the stocks, then mutual fund, as they say, sahi hai. So you can discuss, the mutual fund will be discussed by Dr. Prashant Gupta. So he will be able to tell you more about that. But remember, if you are going to invest in mutual fund, you do direct investment into mutual fund and not through the broker. You will save significant amount of money if it is kept for the long term. Then you can invest in private equity fund. Now, when you are doing that, you are investing in an individual. You have to know the person well, and then only one should go for that. And then there are hedge funds, cryptocurrencies, etc. So securities makes good amount of money, but there is risk involved. You need to think before you get into it. So what is safe investment? Safe investment is the bank FD, fixed deposit. But as I told you earlier, it is a depreciating asset, and you should not get into that unless you have enough money and you are in old age. Government guarantee up to 5 lakh per account per bank. So this is if your money is in any bank, then up to 5 lakh you are secure, but beyond that you are not secure. Sorry. Similarly, non-banking financial companies also give you higher rate of interest, and one may think about that, but this can be a small amount. You cannot put all your money into deposits. Then there are postal schemes where PPF is one of the good way of investment. PPF used to earn 13, 14, 15% about 20, 30 years back, and it was very good investment because you are not paying on tax, income tax on the amount which you are investing. And in addition, whatever interest we generate, we are not paying on that.
करो ना भैया, दो बाकी है, दो करो, फिर थोड़े दिन ब्रेक लेंगे हम लोग.
PPF is one of the best way of investing in past. And even today, it is a good way of investment. Then there are national security schemes, there are MIS or monthly income schemes. Now, there used to be ATC deduction, so you were not paying tax, but in new tax regime, in some of that, you may have to pay the tax. Then the insurance. Insurance, again, as I told you, the life insurance should be separate out from the wealth creation. And how much insurance one should buy. So if you are young, it is 30 times. If you are in 60s, 70s, 10 times of your annual income. This is rough estimate. In between, it will be different. So life insurance, it should be term insurance. It should not be ULIP, because in ULIP, you are not earning adequate amount of money. Then real assets. Real assets includes real estate. It includes precious metals. It includes commodities, art, antiques. All these are inclusive of real assets. We'll see some of the things in next few slides. Opportunities comes infrequently, and when it rains gold, put out the bucket and not the thimble. Again, this is, so if you have found something which is good, invest adequate amount in that. If you invest very small amount, then the amount which it will earn will be again less. So if you think something is really good, invest in large amount. Like if somebody has invested in real estate in 2004, it multiplied 6, 7, 10 times in next 8, 10 years. So something like that. If you have not invested, you will not make money. Then evaluation of the investment. So one has to evaluate time to time whether whatever you have invested, whether it is generating any returns or not. If it is not generating adequate returns, you need to rethink whether you want to change your asset allocation, whether you want to get into different way of, for an example, if the money is lying in savings bank account, it will earn you 4, 5, 6%. and it is basically depreciating asset. You don't want to get into that. At the same time, if you're invested in mutual fund, which is not generating income, adequate income, compared to market, what it is giving, you need to think whether you want to get out of that sector, whether you want to get out of that investment. So what you evaluate, how much return and risk, what is the risk? You want to minimize the risk as much as possible, and you want to generate as high as possible. Now, this is not easy to learn, very easy to say, but it's not easy to learn. But more and more you get into, you will learn more and more about it. Then safety, you want to preserve your capital, whatever happens, whatever money. So if you think your capital is going to be lost, you don't want to get into that. So when I'm saying this, you don't want to do derivatives or futures and options. It can completely wipe off your income. Liquidity is again important. So if you want some money within few months, you don't want to get into stock market. You can keep it in cash, you can keep it in bank interest, liquid fund, arbitrage fund. It will give you anywhere between 6 to 8, 9%. So, but you can liquidate without any problem. And hedge against inflation, it should earn more than inflation, whatever way you want to keep money. So then and then only your capital will get appreciated. And then you need to always think when you get money in your hand, how much money or income tax you will have to pay to the government. So all these factors will decide in which class or where you want to invest. The most important investment, you can make it in yourself. It means that if you are laparoscopic surgeon, you need to invest in your skills. That you want to learn laparoscopy, you can go anywhere, learn it, you can spend money after that. You can buy equipment if it is your hospital. So invest in yourself first. If you are a businessman, you earn in your, you invest in your business before you think about going into the stock market. Factors which decide about investment. So we did discuss that short period liquidity, long period you can get stocks, fund, age. Younger age, invest in high risk, high reward asset class. As you become older, invest older. When I say older, there is nobody thinks that they are becoming old. But what we'll say that the cash flow, if it is decreasing, then amount of money which you invest, some of the money should be less riskier asset class. If your cash flow is good, you may continue with equity or high risk reward. So theoretically, equity should be percentage wise, 100 minus whatever is your age should be in equity. But if you ask me, my almost 80 to 90% will be in stock market. So ultimately it depends upon your attitude toward risk. If you are moderate, then mutual fund. And if you will want low risk, then the bank interest. Then financial goals. Buying home, you need a large capital. So you need to plan it in advance how we are going to do it. You can use your long-term capital gains against buying the real estate. Then you can save on income tax which you are going to pay on long-term capital gain. School, college education for children, again, many times you can keep that funds, separately so that their education do not suffer. And same thing is for the retirement and pension funds. The most important investment you can make it is in yourself. That is what always remember. Then return on investment, we did say bank savings account 3 to 4%, fixed deposit 5 to 6, PPF 7%. Gold in long term will earn 6 to 8%. So there will be periods when it can multiply in short period, but then it will be lull for decade or 20 years. So if you say over last 100 years, it can earn about 8%. Then equity, it is variable, but if we see Sensex over last 40 years, then it has given roughly 15% of compounded growth. Important is compounded growth. And real estate is again variable, as I told you. Some period it will multiply, like the last 10 years, there is hardly any appreciation in the price. So this is time-wise correction. When the price is not appreciating, means it is depreciating. It is a time-wise correction. In other asset class, the 100 rupees probably has become 500 rupees. This 100 rupees in real estate is 100. So you have lost on that. So there will be periods where you will not make money. So this is just a high risk and low risk chart it is showing. It is better to hang out with people better than you. Pick out associate whose behavior is better than yours. You will drift in that direction. Real estate. Now it is a well protected investment, whether it is commercial or residential. However, you need to remember that the return per year will be 3 to 5% if you are giving it on rent. Now there will be capital appreciation, as I told you, it can be variable depending upon the when you have bought and whether it is the prices are appreciating or not. So as I told you, between 4 and 14, 2004 and 14, it multiplied significantly because of lot of black money was in circulation. Today there is not a lot of money in circulation which is in black. The chances of appreciation are there, but not a lot. So if you are thinking of doing investment not for your stay, then it may not be a correct investment today. Since 2014, the prices are static. We already discussed there are two types of correction, price and time. So it has gone through time correction, the real estate. And this is again, we told the long-term capital gain will be with indexation about 20% in old scheme and 12.5% in new scheme which has come out now. So disadvantage of real estate is you need large amount of capital and it can't be easily liquidated and there is a maintenance cost. So it takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you will think differently. Now, if you don't have that much of surplus for investment in real estate, one can think about REIT. That is real estate investment trust. So it is something like mutual fund. You can even invest small amount. These are few REITs available in India. One may look at it and you can even invest 30, 40, 50,000, 1 lakh, 5 lakh, 10 lakh into this. And this is how it works. So a lot of people will get together through REITs. They invest there. The REIT will buy the trust will buy the property. They will earn the income and which will be distributed to the people. Then comes the bonds. So purchasing of the bonds, as I told you, it depends on the life cycle of the interest rate. So you need to think which is the correct time. So when you buy a bond, basically the company or institute will give you some amount of interest on that, which will be variable. It will be anywhere between 7 to 10%. It used to be much higher in past. It can be from treasuries, BMC, corporate, and many other types. So this is for the people who have very low risk appetite and less volatility. So again, this is very important. Honesty is very expensive gift. Don't expect it from the cheap people. This we discussed earlier, so I will skip it. Then comes the gold. As I told you, there are two types of gold investment: physical gold and sovereign gold fund. If it is physical, there is no interest available every year, like what you will have 2.5%. Will be appreciation in the price. It can be easily liquidated in any part of the world. There will be long-term capital gain when it is sold. But if you buy sovereign gold fund, additional interest of 2.5%, no income tax applicable on maturity. That is 8 years as of now. exit option is available after 5 years. So if you are thinking of buying gold, sovereign gold fund makes sense, though government did little trick this time, they may not be able to do every time. Money is not everything. Make sure you are, before you say that money is not everything, make sure you have enough before you speak such nonsense. This is what Warren Buffett says. So we all should have adequate money. Then insurance, life, medical, car, travel, all these insurance are important. Life is particularly important in early stages of your life when you don't have enough. So as I told you, it should be 30 times when you are in 20 or 30s. And as you become older, it can be 10 times of your annual income. Medical minimum basic 5 to 7 lakhs, plus top up of at least 15 to 20 lakhs. That is basic minimum one must have, and always have additional waiver of eligibility of higher class of admission. Means suppose you take 5 lakh ka insurance, you should be able to take the room worth 10,000, because there used to be cap of one person. Means you can't take room which is more than 5,000 rupees. The best chance to deploy capital is when things are going down. So when the market is correcting, that is the time when you want to think whether you want to invest or not. It is difficult, but if you play the contrarian bet, you will make huge amount of money. Then you can invest in equity. We will have separate talk on equity basics. So strategies for maximizing equity investment, you need to think about long-term, sectoral, fundamental, regular review and rebalancing. One need to think whether you want to go and do direct or through mutual fund, or you want to take portfolio management services. All this you need to consider. You can discuss with somebody who knows about all this. If you are going to go through PMS, there is some maintenance cost which may be 1 to 2% of your portfolio size, and they may take additional percentage in profit, and some may be only with brokerage. So you need to think all these factors. This does not bother Charlie and me. Indeed, we enjoy such price declines if we have funds available to increase our position. So this is when the market are going down, you want to deploy your whatever funds are there for capital appreciation. Remember, if you want to make money, then discipline, that is what is important. Spend after investing and not invest after spending. Invest your time in learning new skills, then wasting your time on social media. Investment without knowledge is very risky and not advocated. So read before you get into. Speak with people who are experienced, attend courses. Everyone in family should learn and understand financial matters in general. The sovereign gold fund is a different line. Lack of patience, we need to give time for compounded return. So even Warren Buffett made his majority of money after the age of 60. So you need to give time. If you don't give time, it will not make, the compounding effect. Don't waste money on fancy stuff. Again, this has been told by Warren Buffett, but you can take your call. Investment should start from early in the life. What is early? So Warren Buffett started at 12. I started maybe at 35, 37, 38. Many of you are younger, 20, 25. I think this is the time. When you start earning, start investment. Earlier than that, your parents can do for you. Never keep cash at home or savings account, because that is losing its value. Spending a lot of money on marriage and other functions, that's again your call, but that is basically waste of money. Always diversify the investment. Again, you need to, do asset allocation depending upon your risk appetite. The most important quality for an investment is temperament and not the intellect. It means that if market is going up, whether you want to sell or not, whether it is going down, whether you want, what you will do. So it is not your intellect, but temperament. You should be patient with yourself. You should be patient with your money to multiply for you. And this is the last slide from my side. Financial freedom. That is what all of us are looking for. So what is that? When you have reached a place where you are no longer stressed about money and feel at peace. So that is financial freedom. And it gives you time, it is net worth driven, goal driven. Those who achieve the financial freedom, they go through the success is obligation, invest in money. So you need to think those who are in debt, they will waste time. Their income means salary to salary. They will be doing that. Work driven pays others first because they have to pay the interest to others. Success is evil for them. Spend money, use debt for spending. So start investing early in life for the compounding effect to come. With this, I'm going to stop my talk. Thank you for your patient listening. And I will request Dr. Harick to come over and continue. तन्मय को host बनाना पड़ेगा.
Thank you, sir. It was really a wonderful talk, and we could. Thank you, sir. So the next up, we are going to have Dr. Tanmay Motiwala. So he is going to talk on fundamental analysis, which is basically finding the intrinsic value of the asset. And he is a pediatric surgeon from AIMS Jodhpur, and he is also a big celebrity on the internet. Many of the younger lot would know him. Over to you, Tanmay. Thank you.
Thank you, Dr. Harick, and thank you, Rasik Shah, sir, for inviting me into this wonderful discussion. And I hope I am audible. And yeah, so I think the last two slides shared by sir sums up the entire talk that we'll be discussing around today. And if you can get those things, it's about weaving around the entire process to achieve those two last two slides that Rasik sir showed. And in this particular session, I'll be talking about fundamental analysis. So whenever you are into stock picking, you would be doing either a fundamental analysis or a technical analysis or a techno-funda approach. Which one is the right approach? There is no fixed right approach that is available. It is what suits you. And suppose you are busy entire day in the hospital and you don't want to check throughout the day. Maybe you may try a fundamental analysis, or if you feel that you can make more money by looking at the technicals, you can do that. So there is no exact prescribed manner which works. You can see what works for you, but learning is important. And with this, I would like to give condolences to Mr. Ratan Tata, who has been an inspiration for so many youngsters like us. And imagine not many of us would be having the capability to build a business like what Mr. Tata did. But what we can do is we can get a partial ownership of some fantastic businesses like this, which he built, and some classical franchises like Tata Group, and then let our money compound while they are working hard and using their skills to manage the money. Standard disclaimers from my side: I am not SEBI registered, and if I use any stock names, it is purely for learning purposes and not to be taken as any advice. And please consult your financial advisor before investing. With this, let me quote Charlie Munger here. So if you see what he says here, he says all intelligent investing is value investing and acquiring more than what you are paying for. You must value the business in order to value the stock. Now, what does this mean? We'll be learning in the entire talk that I am scheduled for today. And I'll give you a brief example how we try to generate it in real life, but then when it comes to market, we forget it. Whenever you go shopping in for sabzi or a grocery shopping, what you'll do is you'll try to bargain with the shopkeeper कि नहीं 20 रुपए का या 30 रुपए का जो आप दे रहे हो, that is not the right price. आप इसको 5 रुपए कम कर दो या इसमें 8 रुपए कम कर दो. and or we may add a lemon or a coriander along with it. So this is the art of bargaining that we need to learn while doing bargaining with the markets. So the prices that come to us are the price that the market is offering to us. Now we need to learn what is the right price so that we can get more value from the price that we are paying. And just tell me in the comment box, those who are attentively listening to this, what do you think, which of this stock is cheaper and which one is expensive? So Bharti Airtel, the stock price is currently around 1728, and Vodafone Idea is priced around 9 rupees. Please type in the comment box which of the following stocks you think is cheaper. Right? I'll wait for the comments, because this is something which gets hardwired into us whenever we start investing, and we have a narrow tubular vision whenever we try to see any stock, and entire decision to buy a stock would be focused on ki theek hai 9 rupees ka stock hai, it is cheap, and a stock that is 1700 rupees maybe overvalued. But this is not how it works. What you are seeing here, what you are seeing here, this one is a price, and this is also the price, but value is different from what price you are paying. Okay, so you'll have to understand this. This is what I'll try to decode it for you in the next few slides. Okay, if you see all great people who are very famous, whose quotes we often go across while learning this particular thing. So Warren Buffett also says, is price is what you pay and value is what you get. But I'll tell you, many investors, they spend their lifetime and never get to understand the crux of this simple slide. Ki price is what you pay, but what you're getting is the value. Let's take it with an example of real estate. Okay, so suppose you buy a real estate property in Bandra. You're a rich fellow. Okay, now this property, suppose it's worth 5 CR. Okay, now just think over it. You have paid 5 CR. Now within the property for that region that you have paid for, now suppose a road gets a sanction near the property that you purchased recently where there was no road. What do you think would be the value of that property if you had paid 5 CR for that after the road that is sanctioned or before the road that is sanctioned? Do you think the value will increase? If you think that the value will increase after that, then probably what we see as a change in price because of that particular activity is because the value has changed. So price is always a function of value in markets, and we often don't know how to identify the value. That is why we keep on buying and selling. And then the most common question from our side is, should I buy? Should I sell? Should I do anything else? This is how our mindset works. Okay, and this is why our mind enters into a mindset which is a lottery mindset or a casino mindset. Tell me how many of you are not knowing any technical analysis, but still you keep on buying or selling at a 15% or a 10% or a 20% profits, because you don't know what to do. You buy a stock, you don't think it as a company. You buy a stock, then you stay invested for some time, and then you suddenly see कि 10% profit हो गया या 15% profit हो गया. Now there is a sudden urge to sell. Why? Because you fear that this may vanish away, the profits. This is because you don't understand कि it is the profit that is driving the price in the long term. In the short term, it can be other variables. So it is how we have to learn. And how do you take the buy and sell call? Because you don't know how to calculate the value of a stock or how to get idea of the valuations. Then what you do, you'll meet someone in some meeting or maybe a party or in some drinks, and you'll get the expert advice from your padosi or your friend or your Tauji, Fufaji, or now even YouTube channels are giving so many advices. SEBI has been after them to regulate this thing, but unfortunately they have not been able to do it. So many Telegram groups are there, or so many groups are there. Even for our group that we that is there, lots of time people would come and keep asking कि मैं इसको खरीद लूं, बेच दूं, क्या करूं? And this is the thing which will keep on happening in a loop if you don't have objective criteria. See, how to build the objective criteria. It is by learning fundamental analysis, or by learning a technical, and then maybe a mix up of all of this. So you'll have to learn the art of fishing, or say if you talk in surgical terms, then you'll have to learn the basics. Only then you can do the surgery. Otherwise, you'll always have to keep asking someone who is an expert कि मैं इसको काटूं या नहीं काटूं structure को. And this is where the recipe for disaster will be there. And then when you follow those recommendations, more often than not, what happens कि जिसका आप recommendation ले रहे होगे या जिससे आप expert tips ले रहे होगे, बाद में पता चलता है कि that person itself in loss, and then you are in a severe depression because now you had invested a significant chunk, and now you are not able to cover those losses up. So it is important to learn this art that we'll be discussing. So when we start picking stocks, the first thing that comes to mind is something called as moat. To explain what is moat, I'll spend a few minutes to discuss how business will have to learn the business models whenever we are picking stocks first. Okay, so tell me, how many of you have eaten Maggie? I'm pretty sure in your homes, kids may be eating Maggie, or in your you may also be loving Maggie. The person who loves Maggie may not want to try a top ramen, or may not want to eat YY. The attraction to buy a Maggie, it's still very high. Okay, why? If you ask, then they will say that I probably love the taste of Maggie more, or this taste I cannot find anywhere. So point number one is taste. Second, the cost is very cheap. You will get in 20 rupees or 30 rupees, and then you can get it anywhere. Now, if I say if Maggie increases the price of the product by 2 rupees, so suppose if the packet is coming for a 10 rupee right now, if it becomes 12 rupees, will you stop eating Maggie, or you will keep eating the same product, albeit by giving 2 rupees extra? Now, what does this mean is, whenever there is inflation, or whenever there is there is a stormy course in the business, and if the business is not able to do well because the margins are getting compressed, because the cost of raw material is high, what the companies where there is stickiness of customers, what they will do is they'll pass on that cost to the customer. And because Maggie may be getting sold in millions quantity, a single rupee or a 2 rupee increase in price would change their revenues or the profits by a very big margin, right? So this is how we like to pick companies wherein there is some sort of, so this is called as moat. So there are some features of moats. I'm just trying to share a story of a company so that you can understand how moats put it. So first one we said, टेस्ट का स्टिकीनेस बहुत ज्यादा होता है. So if I launch my noodles tomorrow, you may not want to eat even if I sell it at 8 rupees. You would still want to pay a 2 rupee extra and still want to stay loyal to the Maggie because you love Maggie. Okay. There was a beautiful example when there was a study that came in, and it was all over the news that there is lead in Maggie. It can lead to lots of complications later. But what happened? Soon got the clearance, and Maggie is still back to how you were eating. So if you see the taste, whatever taste you love, you will still go on and travel and eat that particular food. Second is a low cost product. A low cost product, comparison to iPhone, everyone can afford a Maggie. So iPhone may be a different sort of business model. It may not relate to this, but छोटे जिसका price कम है, it's difficult to beat those kind of businesses. Tell me, what is the research and development what Maggie has done over a period of years? Or maybe a Parle G. Parle G may be eaten like almost a 50, 60 or 70 years, but Parle G has not changed anything except for the label that is stuck outside. Or what is the change in Coca-Cola? What is the change in the taste of Coca-Cola? Probably nothing. They also just keep fiddling around, maybe a zero sugar Coke, or the shape of the bottle will change, the brand ambassador will change, that's it. The product still stays the same. So no research and development is there. Last thing which we also need to see is the distribution network. See how crazy the distribution network is. If we go to the beaches, we'll find Maggie. If we go to the deserts, we'll find Maggie. If we go to the mountains, we find Maggie. If you go to any other continent or a different place, you still find Maggie. So any kind of businesses where there is a taste involved, where is a low cost product, less amount of R&D is needed, great amount of distribution network is there. Those are the set of businesses which will be very difficult to beat. Now, all those businesses where there is some sort of competitive advantage, which is sustainable and durable. How sustainable I talked about was when I said that if Maggie increases the price by 2 rupees, you still will buy that, right? Even if it comes at a cost of paying extra to that brand. So this is where we would want to identify those kind of businesses where the profitability is predictable, they are expanding over a period of time, and the customers stay loyal to that brand and they won't want to switch to the other brand. So this is how a moat is understood. The traditional definition is a sustainable competitive advantage, which is durable as well, but it comes from a terminology which basically means moat is used to be used for kingdoms. So if you see kingdom, then what they used to do was this used to be the kingdom, then they will have water around it, they'll have a big hole so that people cannot enter the kingdom and defeat the king. There will be a single entry. Okay, so not many soldiers can go in. The lots of army would be there to safeguard. Outside there will be water which people cannot cross. There will be crocodiles in it, and there were lots of defense mechanism. So the defense mechanisms that a business creates to differentiate itself from other sort of businesses which may come up looking at them. This particular thing is called as moat. And if you see, if you start reading business con calls of these things, this is something that we need to understand. More often than not, what we do is we do not know the business model of a company. We do not know how the company operates, what is the product. We just end up buying the stock ticker which is there just because it has risen by a 20% in the past, and then you expect that why are you making losses in the market. This is the entire process. You'll have to know what company are you picking, what is the business, what is the product mix, how is the profitability, how is this company going to sustain if some company of this sort comes up again. Example, you can see Zomato versus Swiggy. What do you think? Who will sustain over a long period of time and why? So this is what it should come in our mind, because when we are buying stocks, we are buying a partly a ownership of that company, and you have to think like a owner whenever you are buying a company. So if you buy all the shares that are available of a company, then probably you will end up owning the company, and this is how you decide कि भाई इस company में मुझे stake लेना है कि नहीं लेना है. And whenever we are buying a company, we buy it for the future profit that it will be giving. And how will we get a insight कि future में profit वो maintain रहेगा कि नहीं रहेगा? This comes if a company has a moat. I can share you names wherein moats just vanished away. How many of you know a company which used to make reels, Kodak? Okay, the reels that we used to click pictures. Now this reel wale cameras have disappeared because the technology came in, R&D was there, and suddenly no one is using that. Those are just fancy buys right now. And the technology comes in, it disappears. So you'll have to understand whatever you're buying, please focus first on the moat. And as I said, there are some features to identify businesses with good moats. Now, this may be different for different companies. I'm not saying that all of these may be available in the company that you are having, but there should be some sort of moat. How to understand those sort of moat? These are the some criterias that can be used. And then once you start analyzing more and more companies, you will understand how it works. So low cost product, taste factor is there. Now, it is definitely logical to think that it will be taste factor will be there only in FMCG companies. It may not there maybe in IT company. How can you taste IT company, right? So this is how logically it will help. Then you will have to see what is the distribution network, and you will see how much amount of R&D is needed. Then you will have to see, what is the branding. Apple is something which is a very classical example where Warren Buffett also said initially they made a crazy amount of money, but then it was because of the branding power that they generated so much amount of profits. I wish I could talk more about this, but I would love to, cover more areas, and then maybe later we can, if we have some time, we can discuss around it. another important moat is a monopoly or a duopoly nature of any business. If you see, these are just names, these are not recommendations. Adhesives, we have been so used to this product that we don't say it as we don't say it as adhesive. When we go to the shop, we say कि मुझे फेविक्विक दे दो, मुझे फेविकॉल दे दो. This is how a tremendous kind of branding that a company has done. It has almost gained the entire market share. Now, earlier we used to see some ads on the TV. Now the ads are also not coming. Baby milk. If you see the dabbas of the baby milk, most of the products are from Nestle only. Railway ticketing. Who else is there apart from IRCTC? I'm not saying to go and buy IRCTC, but you have to learn how monopolies are working. No one else can sell tickets apart from IRCTC. You have to sell bottles inside the railways, it's IRCTC. If it has to be canteens inside the railways, it is IRCTC. There's another company, mutual funds. If you see, there is just two, this are oligo duopoly kind of situation, whereas K Fintech and CAMS are there. They basically are distributors. They do the data keeping for the mutual funds. So if you see, most of the out of the top 10 mutual funds, the top 7 are acquired with CAMS. Okay, if you see oil products, then most of the oil products, the market share is with Marico. Cigarettes, you see, the most of the market share is of the cigarettes is with ITC. Those who smoke, they would know this better. So the other homework that you can think about is you have to think of in this lines who are the sector leaders in this particular field: automobile, paints, biscuits, NBFCs, banking, private banks, retail good. So you have to see the products around you that you are using over and over again, and then you have to think what is the correlation. Are these companies good? And this sort of analysis you will have to do for all of the companies. So I've taught you first step. Whenever you are thinking of buying any stock, it should be the analysis of the moat. Okay. Now, another example of moat is Titan. Lots of people may be knowing it. Mr. Jhunjhunwala made a great amount of wealth in Titan, and it has a great share of jewelry. Now, if you understand the story of how Titan emerged was, initially it used to be a local market. Local Sarafa Bazaar में आप जाएंगे, वहां से आप jewelry buy कर लेंगे. But then there were lots of people who had no clue that if they had paid for a 22 carat, are they getting 22 carat or not? They may be getting a 18 or a 17. But then Titan came in, they kept a caratometer. And this is something which I saw when I went for a shopping recently at Tanishq. Not for me, obviously. But then this is what it looks like. This is the caratometer. And real time, if you have some jewelry which is purchased outside, you put in there, they'll tell you how much carat it is, and then the real time pricing would be there. So what it did was it started building trust for the people, and this is where the unorganized jewelry sector started becoming organized. Now there is PC Jewelers, there is Senko, there is Malabar. We can discuss gold again sometime around later, how the entire sector works, but this is how moats are created now. Because the trust factor came in, the people started doing more and more shopping from Tanishq. I suggest you read about gold harvest scheme also. I am sure lots of people who must have done shopping from Tanishq must have been offered the gold harvest scheme also. So you will see the business and understand how good the schemes are. Okay. The next question comes, if I understand the moat, should I be buying them at any price if it has a good moat or not? So this is where the concept comes in from Benjamin Graham, where he talks about confronted with a challenge to distill the secret of sound investment into 3 words. My venture, the motto was margin of safety. The margin of safety or the intrinsic value concept basically says you cannot buy anything at any sort of crazy valuations, because if you are paying too much, then the value that you would get, even if it is a very good company, that it would be low. And this is how if anyone is interested, you can go on and read. It's very difficult to begin with initially, the book by Benjamin Graham, The Intelligent Investor. But then chapter 8 you can read. Chapter 8 is something you can understand. So you have to understand that you cannot buy any stock at crazy sort of valuations, because that will ensure that you have already overpaid for the growth that is going to come in the next few years. And one of the very famous funds really suffered recently, and again, with all due respect to them, but then it's suffered because of that. So you have to understand with this one again with an example. So what happens is, suppose you purchase a real estate. the person, there's a person, again, this example is basically from Intelligent Investor only. You purchase a real estate property, next day your neighbor comes in, you purchased it at say 5 CR, which we decided earlier. So that person says, I'll pay you 5 lakh, 5 CR, 10 lakhs. Will you sell the property the next day? He'll come and say, I'll pay you 5 lakh, 5 CR, 12 lakh. Or maybe someday he'll be depressed because say robbery happens near that particular house, and now this person says, I'll pay you 4.9. So will you be selling? This is how markets also act. So what they do is they'll keep coming up with a price quotation every day, and you will have to understand if you will sell the business or not. You sell the stocks randomly because you think like you just own prices and you're there to make 5-10% profit, but you have a ownership mindset. Then you will realize that इतने अच्छा बिजनेस जो क्रिएट किया हुआ है, अगर मेरे पास उसका ओनरशिप है तो मैं अपना बिजनेस तो नहीं बेचने वाला रोज रोज. ठीक है, दिस इज हाउ इट वर्क्स. And I won't again deep dive into these things, but I'll suggest you guys to read. I'll just cover quickly what are the some basic parameters that are easy to read. But then after this point comes the balance sheet reading part, wherein in fundamental analysis, once you have screened those things, then you go with the balance sheet screening. This needs some time to learn. I'll be putting up those videos in YouTube also soon. So there is a thing to value the stocks, which is called as a price to earning ratio. Again, I can go on for an hour or discuss to discuss price to earning ratio. This basically tells if you are buying a stock costly or cheap, and this is used to compare two things. So a PE of a 20 is cheap, a PE of 100 is expensive, and you will realize often what happens is you may end up buying stocks at a 200 or a 300 or a 400 PE. Now, whenever you buy something at such high valuations, you are doomed. The risk reward is never in your favor. So this is a metric that we use. Then in banks, we use price to book ratio. Debt to equity ratio is something to see if the company that you own is having a large amount of debt. Any company that is having a large amount of debt, the chances of failure can be there. In any company where the debt is not there, the chances to fail is very less because they don't have any debt on them, right? You'll have to see the promoter holding. Why promoter holding is important? Because if the owner himself who's owning the company is having confidence on the company or not, if they keep on selling, then probably they are also doing the same thing which you are doing. Then you will have to see something called as EBITDA margins, if they are constant or not. If they are very fluctuating, then we'll have to plan it on a cyclical manner, or what is the reason of the fluctuation. Those things we'll have to see. Then there is a metric called as ROE or ROE. Then we have to see something called as cash flows. And the last we'll have to see ethical promoters or scammers. So how can you check? You can just type the name of the promoter of the company, and you type it in Google and add scam next to it. If you see there are lots of scams in that company, अगर ड्राइवर ही खराब है ना तो कार कभी अच्छे से नहीं चलेगी. So you'll have to understand, you'll have to pick good promoters. This is why I showed the name of Mr. Ratan Tata initially when I started the talk. And then I'll just two more slides before I conclude my talk. So as Rasik sir also shared this thing. So there's a very famous story. Isaac Newton was also into investing at one point of time. In around 1720, he owned shares of a company called as South Sea, one of the hottest stocks at that time in England. And that particular time, what happened was he feared that market may get out of hand. And what he said was he could calculate the motions of the heavenly bodies, but not the madness of the people. And he sold those shares at a profit of 100%. Now what happened? The stock did not collapse there. It went on rising. And then he went on to buy that stock again at a much higher price, and then lost 20,000 pounds, almost equal to modern days $3 million. And for the next of his life, he would get angry if anyone used the word South Sea in his presence. So this is how it happens. So stock market is a place where a person with a lower IQ can also beat a person with a higher IQ. If you have that behavioral aspect ingrained in you, it is more about the time in the market rather than the timing the market. You have to pick good companies. You have to sit on them for a good amount of time. And I'm pretty sure a few days back, someone shared in our group also, they made around a 50x or something like that in a single stock. This kind of returns happen when you sit on a stock on a good company for a long period of time. And this is where the significant amount of wealth creation is done. And Thank you so much for patient listening. Thank you, SRCC team, for inviting me for this talk. If there are any queries or those things, you can type it in the comment box. You can drop in a feedback to me also about the session that we did so that I can also improve upon this. I hope I tried to make it very simple. I did not try to include lots of technical aspects into this so that it can be digested easily by the audience that is there. These are my social media handles. Thank you so much. Over to you, Harick.
Thank you, Tanmay. It was a
Question
one.
answer session 4:30.
So there's a question answer session at around 4:30. Please hang around till then. Thank you, Tanmay, for the interesting talk. And next we have Dr. Naresh Biyani. He's a pediatric neurosurgeon, and we are going to listen about technical analysis from him. Over to you, sir.
Can you hear me?
Yes, sir, you're audible, sir.
Yeah. Thank you, SRCC team, and happy Anesthesia World Anesthesia Day for all the anesthetists who have joined. I think there is some delay in the YouTube live. Today, what we are going to discuss is a Wyckoffian analysis. Actually, I am a COVID graduate, and I learned this during the COVID times, and how Rasik Shah sir or Dr. Tanmay had told, somebody who doesn't know anything, and if somebody gives a chart, so can we make sense? It's like a language, and can we learn a language? So the disclaimer is this is all education purpose, not intended to promote any strategy, indicator, or techniques. Everybody has to do their own research and consult their financial advisor. Few images are downloaded from the internet and credit goes to the original author. Not intended to change anybody's trading or investing style, and I'm not a SEBI registered analyst. What is chart? The chart is a sum total of all the known and unknown information that is available to all the informed and uninformed market participants. Informed, when we call, are the smart money, and uninformed is the retailers. So smart money and retailers, there is a big fight that goes on, and it's a zero-sum game. So somebody has to lose and somebody has to make a profit. The good part is that it is common to all, like I can see an Apple chart, whatever chart somebody else is, like Harry is seeing or Rasik Shah sir is seeing, it's all common, nothing can get manipulated. The result, the fundamental analysis, the auditor would have something, the informed participant would have something, or probably as to me, I don't know to read, so I would not have any idea about it. The bad part of the chart is that the dominant market player knows about the same and also manipulates the thing, for his own advantage. And can we look the footprints of that? So the take-home message is that we need to understand the Wyckoffian's price cycle. So any stock that goes into 4 stages, there is an accumulation that happens. There is the markup phase, that's the stage 2. Then there's a overbought or distribution phase, and then there is a markdown. So if somebody looking at the chart is able to see all these 4 things, half of my work is done. So this is the take-home message number 1 from my. So who was Wyckoff? Richard Wyckoff was a century back, and he was a famous trader, and more than trader, he was an educator, and his idea was to educate the common people, how the stock market or Wall Street, what they call there, works. So he used to start his editor magazine of Wall Street, and then he researched the common winner's characteristic of the stock. And then he also looked into the smart money of his time, JP Morgan, James Keen, and Jesse Livermore, and came to a conclusion, how would they operate and how the things can be used by a retailer in their favor. So Wyckoffian analysis consists of 3 laws. There is a concept of a composite man. Then there is a methodology how the Wyckoff charts are analyzed. Then there's a 5-step approach to the market, and then how we come to a target. Any smart money who does the accumulation or distribution have a target in mind. They just don't do it in thin air. It's a big effort that is required, and they want to make sure that they get a good result. So composite man or composite operator, what he called, is the main person who moves the market. Okay, he can be a market maker, big bank, whales, whatever, institution, HNI, whatever we can call. But we would give him a name as smart money. So why he's smart? Because he has more information and also best of the best technology to manipulate the stock. And he always acts in his best interest. He's not interested in anybody else's welfare. And he ensures that he always buys lows and sell high. Now, the good part is that whatever the retailer people do, the composite man's behavior is opposite to that. And that is how they make the transaction, the trade. Another thing that the Wyckoff saw was that the movements of composite men, are predictable. And if some investor or trader, can identify those footprints, can be their strategy can align with the composite man, and then we don't have to do it. I cannot move any of the stocks, but yes, the institution moves, and we have to just piggyback them. So the Wyckoffian laws are 3: supply and demand, cause and effect, and effort and result. Looks very complicated and all those stuff, but it is not that complicated. It's very easy, So we'll come to the first law, supply and demand. So what they say is that there's always constant balance, between the demand and the supply. And that is why the trade happens. So we need to see the state where it is a balance and when there is an imbalance. It's very simple, If the demand is more than the supply, then it is imbalance. And that is a markup phase, the uptrend is there. If the supply is more than the demand, then it is again imbalance and the price drops, downtrend. And when the demand and the supply is being matched, the stock is in trading range. So we call it as a trading range or accumulation or distribution. So looking at the chart, if we can make out, what stage of the cycle the stock is there, then half of our analysis is done. We don't have to scratch our head. The second thing was that the cause and the effect. So any smart money that does the activity would accumulate the stock so that the uptrend that happens is an effect. The distribution is again the same thing that leads to a downtrend. And then by point and figure charts, we can know what is the accepted target. Now, this is the third law, and that is very interesting. And that is what takes the interesting part of it. So what they say is that the law of effort and the result. The effort is the trading volume, and the result is the price movement or the range, high and the low, or the spread. So there is a behavior, what we call as a divergence and disharmony. So if the volume is high and the range is high, it is harmony. If the volume is low and the range is low, it is harmony. And this is an activity of the smart money. But when there is a disharmony, that is where is the window of opportunity for us to make substantial gain from the stock movement. So now the volume has a very different interpretation, So the simple one, everybody would know that is that high volume and high spread, or low volume and the low. But we are interested in the low volume with high spread or high volume with the low spread. Okay. Now the problem with the volume comes is that volume has a different interpretation. They have a different meaning in accumulation phase, in the breakout phase, in the uptrend phase, or when the near uptrend, I'm going to run through a few examples and then you'll be able to see that. And volume during the contraction phase also has to be interpreted in a different way. Our problem is that we know something, we know a rule, and then we try to apply the same rule and same yardstick, and then we say that, oh, we cannot do that. No, it is not something like that. So we need to, it's like we doctors, we know how to rationalize the symptoms and then come to a diagnosis. It's something like that. It is just a simple, pure analysis that can happen. Okay. Volume is the only visible footprints of the smart money. Okay. So if somebody doesn't use the volume, probably is not interested in looking at the smart money footprints. Another thing is that the price can be manipulated, but the volumes cannot be manipulated. If the smart money wants to get into the stock, They have to come with the volume. If they have to exit the stock, they have to come with the volume. They cannot manipulate, the price they can manipulate, but the volumes cannot be manipulated. So it is a leading indicator. Okay. Now the smart money would have best of the best minds. They would have the best of the best system or tools. They have good liquidity, very heavy liquidity. And they have a lot of patience also. They can hold a stock for a long, long time, without losing the patience also. So we cannot do that, as a retailer. So what we do is that when the stock comes out of the trading range, and that is when we get into the stock, and then we exit at our own exit criteria. Smart money, the another problem is that they have an ability and desire to manipulate the stock for their gains. The stock doesn't go one up rocket like that. It keeps on manipulated, and that is what we see. So the Wyckoffian 5-step approach used to be: first is to determine the trend and the cycle of the stock. See the asset strength, compared to the market, what we'll discuss as the relative strength. Look if there is a sufficient cost that has been there, if it is appropriately accumulated. Then see how it moves appropriately. And then fifth step is timing of entry and the trading tactics. That is the fifth step. What happens is that we don't look at the previous things and then directly jump on the entry and exit methods. What Wyckoff theory doesn't tell is that it doesn't predict. It never predicts about the future action. It is just the chart in the real time and where we can align ourselves. Okay. So the accumulation schematic. This chart looks slightly complicated, but this is the crust of accumulation. So how it is start is that there's a downtrend. So there is a preliminary support that comes, and then the selling climax. This is the first two activity that tells that the smart money has made up their mind to stop the downtrend. Immediately there is an automatic reaction, and the automatic reaction and selling climax finds a trading zone, the boundaries of the trading zone. And then there is a secondary test. So there's a phase 1 of the accumulation. Then comes the phase B, phase 2, where it is slow gawning action, where all the weekends are taken out and the smart money keeps on buying it. It can take for weeks, months, or days. Then comes the phase C, testing phase, where they look out for the remaining supply, and make sure, if there are any weak hands that can be removed from the stock. Why they want to remove the weak hands? Because weak hands would start taking profit at small moments, and they don't want that thing to interrupt. Then the stock is in the phase D, where they have really made up their mind. There is a sign of strength that happens, and then the stock comes out of the trading range, and this is the markup phase that happens. Okay. That can be slightly different, but we'll not go into that. The distribution schematic, again, same thing in the reverse order. So there's a primary support that comes, then there's the buying climax that happens, automatic reaction, secondary test. Now this is sign of weakness. So slowly the selling is being done, and on the euphoria, the whole stock is being decamped. Smart money doesn't stop at that. What they do is reverse of the swing, upthrust in accumulation. What they would get the stock out of the trading range and trap the breakout traders or the FOMO traders. And after that, the stock is brought sign of weakness, and then the stock is there is no smart money left to hold the stock, and then the markdown phase starts. Okay. So take home message. We understand the Wyckoffian price cycle, accumulation phase, markup phase, distribution phase, and markdown. Looking at the chart, we should know that. If that is done, a lot of our pain and agony and also money can be saved. Okay. So how it starts, So the methodology that goes is that every bull buys with the hope that the price is going to go, but he doesn't understand the market side. The stock gets beaten down, and nobody is taking care of it. Now the smart money would find some value in the stock. They need a liquidity to buy loads of the stock, the inventory. So they use this negative news and silently accumulates the stock. Once we see the accumulation that is happening, there is no point in jumping into the gun, because still we don't know, whether the stock, how long it will be in the accumulation phase. Okay. They make sure that the weak hands are removed by the actions. Once the smart money is all filled, suppose they had to buy their 100 units of the stock, and once they are like 95 units is been loaded, that is when they make a range breakout with a large volume candle. This is just an advertisement for the other people that the stock has come out of the trading zone. Why do they do that? Because looking at the volume and the range candle, the momentum traders would get into the stock. And this is what the smart money wants. The momentum traders would add more fuel to the momentum, to the fire, to the stock prices, and the stock still keeps on performing better. Once the stock has the momentum and performs better than the index, it comes in the eyes of the relative strength followers. There are a lot of algorithms that is there, and the relative strength followers also joins the party. The stock becomes the social media discovery, a positive story has been built around, euphoria is generated. Now, traders who are sitting all this throughout, they get into the FOMO, and they also start to join the party. And what does our dear friend Smart Money is doing now? The Smart Money is selling the euphoric FOMO bulls, who are late into the party. Once the whole inventory is sold out, there is no support and the stock starts falling down. Now, the people who have missed, the traders would like to buy on the dips, hoping that the next rally they can make some money, or they would average up their prices. The thing. So these are known as captured bulls. So they are given severe pain. They keep cursing everybody under the sun, the media, social media, CNBC, everybody, and probably would not return to the market also. And the story repeats in the different stock. And this is the nutshell of the Wyckoffian cycle that happens. It keeps on happening. Why this happening? Because the human mindset doesn't change. Okay. There is another concept called Suhari. Okay. Suhari is a Japanese concept where there is talks about the stages of learning or mastery, and the same thing can be applied in our trading activity also. So Su is that we follow from our teacher or mentor. They give a guideline and we follow the rules. Now, if I start applying whatever the Wyckoffian Wyckoff has preached or written, I find that it doesn't work right now. So I make some rules and break some rules. Okay, that's the stage of Ha. And once I know, okay, I have taken the skeleton or the concept of Wyckoff and I have made some rules, and then it is turning into a profit. That is the re phase. Okay, the same thing happens in our surgical training also, and almost everything in our life. When you learn a new language also or something. So first is you follow the rules, you break some rules and make your own rules, and then you become a rule. Okay, so how Wyckoff had 5-step approach towards the market, I'm going to describe how I would do my approach to the thing. So first is the Wyckoffian stage analysis. Then we are going to talk about the moving average, 200 moving average and relative strength. If time permits, then we'll get into the other things. And the most important thing is journaling all our trades. And it is not the money that has been made. We have to make sure that are we following the rules? Okay, we'll go to the trading view now. Let me know if you are seeing my screen.
Yes, your screen is seen.
Yeah. So I'm run through few examples and try to see, if we can find some value or any information that we can apply in this present thing. So the name of the company or the name of the stock is not important. When we are learning, it can be anything. Okay. So I'm not a SEBI registered, and this is just an example for teaching purposes. Okay. So this was the distribution phase. So all my chart would have a 200 moving average. This is a simple moving average. We don't want any fancy moving average. Okay. So this was the distribution that happened. Okay. And this was the upthrust in accumulation. The bulls were trapped. Okay. And then once the breakage of 200 moving average happens, there was a markdown that happened. Okay. So 200 moving average is the last line of defense for the bull. Correct. So if somebody can take this as a message of this 30-minute stock, and they can save a lot of their money and pain actually. Okay. So now we come to the accumulation phase here. Okay. So you see this is a volume. So this is the primary support. And then it is a secondary support that happens. And then the trading range was made. And then this was the phase 1. Then this was the phase 2. And probably this is the spring, in the trading range, the stock was brought out, from here. So we'll see a lot of these springs, on my charts. Okay. So basically the spring is to take out the weakest of the weakest hand, and make sure that there is no added supply. So if somebody doesn't sell at this moment of time, would not be affected even if the stock prices goes down. And looking at the spring is not a criteria to enter the stock also, because we still don't know how much the accumulation is still going to be going around. Okay. And then there are spurts of activity, the volume activity that happens. Okay. But still we don't have to buy, we would buy only when the stock comes out of the range, So here, see, the stock comes out of the range with the high volume. So this is now the advertisement. Once the advertisement is done, so a lot of people, a lot of traders, they would be just waiting for that, and now they jump the party, The smart money has already accumulated this price, and when they accumulate, like now the price is like 500, near 500, but they don't want to sell at just 10% or 20% profit. They have a huge target. Okay, so this was 500 price, and the last high was like 1,000 thing. So that was also taken out with the big range candle, this volume activity. Okay, and we still don't know. No, we are not finding a signs of weakness. Now, if you look at the 200 moving average, it is slowly slanting up. Okay, and that is what we want. There's a smooth thing. And we as a doctor, we can keep on doing our work, and in the night, and end of the day, just make sure if there is some weakness that is coming in. Okay. Another one. Now, the good part is that this is very, very common, Means it is not that it cannot be make out or not, So now here, another stock had an uptrend, got accumulated. Okay. So here the FOMO bulls were all trapped. Then the spring was done. Okay. And now once the trading range has been breached, this would be the ideal point to buy. Okay. Now, this was the largest volume on the chart, You see this here? Okay. And on this day, the promoter sold. So when the promoter sells the stock, that is taken as a negative thing, But after the promoter sold also, the stock is still going up. So now the question is that when the promoter sells such huge quantity, there is a smart money who is going to buy. And when they buy, they would have made their homework, What homework they have done, what business analysis they have done, what fundamental analysis they have done, I don't have to get into it. But I know that if they are keeping the 200 moving average intact, and if the 200 moving average is rising, I need not come out of this stock. Okay. Simple Wyckoffian analysis. Okay. Okay. Again, same thing. This was the IPO probably. And then there was a big trading range. So if somebody buys here, just above the 200 moving average also is not good, because we need to find the stock that is performing better than the index, So how do we know that the stock is performing better than the index? There are a lot of indicators in TradingView. The one that I found better is that relative strength of a stock, by Bharat Trader. Okay, it is free and everybody can use that. So once you put it, so this is how it comes. Okay. So what I do is that I change a setting here 50 period and put 50 moving average. Okay, and the comparative symbol is Nifty. Why we put Nifty is that all my activity, the first purpose is that I should be making more money than the Nifty. If I cannot make more money than Nifty, then I would better buy Nifty ETF or Nifty Bs and keep quiet. Utilize my time in some different. The second setting that I would use here is that slightly long term, 123 days. Again, Nifty comparison, and here the period I will keep as 200 days. Okay, this is a free indicator. Everybody can use this. Okay, so now you see this here. It was still not performing better than Nifty, and this is where it started performing better than. Once it starts performing better than Nifty, then you don't need this. Okay, because if the stock is accumulated from here, this momentum itself you can make out by the visual untrained eyes. You don't need the relative strength for that. When the Nifty is falling, now the stock is showing the strength. In the recent, like October month also, it is gaining strength. So I don't have to look for the relative strength also. Simple visual impression is also important. But the challenge comes is that when you want to enter the stock. So if you see here, after the accumulation that happens, these are the big range candles where the stock came out. And then again retested its trading range. And this was the best point to get into the stock. Another one. Okay. So again, like from 21, the stock gets beaten down. Okay. And below 200 moving average, a simple rule, if the stock is below 200 moving average, no matter what great the company is doing, what great is the fundamental, if we still don't get into the stock also, means this is from a swing point of view or a positional trade point of view, still we avoid a lot of losses. So Paul Tudor Jones, he has told, that not any good activity happens below the 200 moving average. So this was what the accumulation that was happening. Okay. A nice spring action. The stock came up to 150 rupees. So most of the weakest hand got out. Then again, it got reaccumulated. And this is how it broke out. So when the stock breaks out, after so much of accumulation, the smart money doesn't want peanuts, 10%, 20%, 15% gain, So probably the range breakout was at 300 rupees. Yeah, 283. And now the stock is almost 3x. And still going strong, Still there is no sign of any weakness. So now what happens is that once the smart money it takes the thing out, then the new people joins the party. They would find a good news or some other discoveries that is happening, and they drive the rally. The smart money just don't have to do any activity here. And that is how, when you see the volumes over here, you would hardly find any great volume. You see this here is hardly any volume activity. And when it is required, suppose they want to take out the range, this stock, this was this previous all-time high at 700 rupees. And that is when the smart money pumps the stock. This one. And the template remains the same, So there was a downtrend, slight uptrend, and then the stock got accumulated. So I got into the stock on the Maurot day, 12th of November, when the stock had just come out of the range. And then it's going smoothly. So somebody would complain, that you are giving all the past stocks, we want something that is more recent. So again, I'll go through these two charts first again, about the volume thing first. So we know this, traffic lights. So these are again the high volume charts, You see this here? Even if you don't want to take home message, anything, this chart, this is the take home 4 message. So this was the largest volume. And this was get set, One need not buy at this point. Then there's the second largest volume, and that was ready. And then the stock rose very rapidly. And then this is the exhaustion volume, So the day the candle opened, it had gapped up, went up with high volume, trapped all the retailers, and then closed down. And now there is no support, The smart money must have exited at this point, Let me just get that drawing through. So the smart money would have exited at this range, Okay, this was the first sign of weakness where the stock had not been able to close. And this was just to trap the bulls who have missed the whole rally. And here the volume is the only thing, Nothing else. Another example. 2 more minutes, Prashant? And this is classic, This is classic volume signature on the chart, So again, get set, ready, go, and then the selling happens. And when the selling happens, this is the largest volume on the chart. You take out the chart, of 2 years, 3 years, longest. This is the highest volume. And if you see a highest volume in the chart, at very away from the 200 moving average, just get out of it, Don't think twice. Okay, the smart money is very smart. They don't buy at that high price. They would buy near the 200 moving average. We'll take this example. Okay, we'll take this one. Okay. Today it has made a big candle, but the smart money activity was not this day, It was during this time, where they have accumulated the whole thing and have done twice the spring action also. Now you see, these were the 3 big volume days. And once we know that these big volumes are there, when the smart money is involved, they would protect all their interests. Okay. Last chart. This is again classical, classical. Now, I'm not interested in the name of the company. I'm not interested in the fundamental. If the fundamentals are good, if somebody can help me out, I'm very happy. But the chart would have that, the smart money would have done their homework. The stock was in downtrend. There was a spring action. The stock had just started above the 200 moving average. Day for yesterday, there was a range breakout. And today, even if it's the volume, there was a selling that is coming in. So it is still not nicely accumulated. But yes, the accumulation has been done. And when you try to see the relative strength, it is performing better than the Nifty. Okay. Thank you very much.
Thank you, sir. Me and Biyani sir share passion for charts, and we usually discuss when he's around in the hospital. And it's always a pleasure to learn from him. Thank you for the talk, sir. Next up, we've always heard mutual funds sahi hai, mutual funds sahi. You can see these ads coming up, but which mutual fund to buy? Because there are more than thousands and thousands around here. So Dr. Prashant Gupta, who is a practicing orthopedician and a mutual fund expert, will help us out with that. Over to you, Prashant.
Am I audible?
You're audible.
Yeah. So hello everyone, I'm Dr. Prashant and we'll be discussing about mutual funds and how you can build your mutual fund portfolio. A standard disclaimer before I start, I'm not a SEBI registered advisor, so whatever I'm saying is for educational purposes only. So what we have learned so far in this discussion is any investment we make, whether it is in stocks, whether it is in real estate, any investment we are making it to get returns. And ideally, those returns should beat the inflation rate. So whether we are doing fundamental analysis, as Dr. Tanmay discussed, or whether we are doing technical analysis, or whether we are doing mutual funds, or we are investing in other assets like bonds, gold, real estate, we are only doing it to make returns. Our end goal is to make returns. Now let's understand this with another example. Let's say you want to eat a cake. Now you have two options. Option one, you go to YouTube, you learn how to bake a cake, then you buy all the ingredients, and then try baking the cake multiple times till you get your perfect cake. Option two is you just go on Google, you find a good bakery in your city, and then just buy a cake, whichever flavor you want. So both options, the end result is the same. End result is you are getting the cake in both the options. But the difference is in option one, you're doing your own research, your own technical fundamental analysis you're doing. In option two, you're taking the help of an expert. So same thing is with mutual funds. If you, let's say you don't have the time to do all the research, or maybe you have the time, but you're not interested in, going through the balance sheet or going through the charts, then you can take the help of the expert to manage your investment. So before we go on and move to how to select the mutual funds, I would like to clear some of the, common jargons that are associated with mutual funds. So we'll take an example. So let's say there are 5 people in a hospital. One is an intern, an anesthesia resident, a senior professor, a physician, and a dermatologist. Now, all of these people, they want to invest their money, but for whatever reason, they don't want to do their own research. Now, what they do is they approach a stock market expert who is Mr. X. And this Mr. X is a seasoned investor with a long time good track record. And what they do is they tell him, okay, we'll give you our money and you invest it, and whatever returns you generate, that will be ours. So Mr. X agrees. Now, what happens is these people, they will give different amount to Mr. X, depending on what their earning is, how much money they want to invest, their risk profile, etc. So the intern, for example, gives 20,000, the resident gives 30,000, senior professor invests 3 lakh rupees, physician invests 1 lakh, dermatologist invests 50,000 rupees. So the total pool of money with Mr. X is now 5 lakhs. So now, since Mr. X is managing all of the money, Mr. X is now the fund manager. And this 5 lakh rupees, that is the total amount that is being managed, that becomes the AUM or asset under management. When you go on Google, search for funds, or you go on apps and search for funds, you will see all these terminologies that we are discussing. So with very simplistic examples, I'm just trying to explain what these terms mean. Now, Mr. X says that since you are taking my services, I'm doing all the research work, I'll charge a 1% fee on your whatever amount you are giving. So this 1% fees that he's charging, that becomes the expense ratio. Now, Mr. X, with all the 5 lakh he has got, he decides to invest in 5 stocks. So those 5 stocks are Reliance, Tata Motors, HDFC Bank, ITC, and Tata Technologies. So he invests different amounts in all these 5 shares according to his research. He's not asking those 5 people, he's doing his own research and investing it. These 5 companies in which he has invested, these all companies, these together are known as mutual fund holdings. Now, what is a mutual fund manager? Mutual fund manager is responsible for managing your fund. What is an AMC? An AMC or an asset management company is a company where the fund manager is working. So fund manager like Mr. X is there. So multiple fund managers are across our country. So they work in different companies. And mutual fund is basically the mechanism by which the fund manager is managing your funds. Now, this is a screenshot from a popular mutual fund app. So what we are seeing here, These are the names of different mutual funds apps. So like Motilal Oswal is there, and Bandhan is there. If you can see, Bandhan is there. Bandhan is there twice. Then ICICI is there. IDBI is there. Motilal Oswal. All of these are AMCs. So these are companies, and in these companies, fund managers work and they invest your money. So AMC can have multiple mutual funds. Like in this example also, Bandhan is having 2 mutual funds. Now, here is another example of a very famous mutual fund. Some of you may even be investing in this mutual fund. This is Parag Parikh Flexi Cap Fund. So in this, if you see read the whole name, the Parag Parikh is the AMC. Flexi Cap Fund is the category of fund. And if you can see here, if I zoom in, if you see here, the fund managers are also written down. So this particular fund has 5 fund managers. So fund managers can be 1 to any number of fund managers a single fund can have. And same, this is also a screenshot of the holdings of Parag Parikh. So similar to what Mr. X was doing, he was investing in 5 companies. This Parag Parikh Flexi Cap is investing in multiple companies. These are the top holdings. So if you have invested 100 rupees, let's say 100 rupees in this mutual fund, then 14 out of 100 goes to CCI, 8.1 goes to HDFC, 7.3 goes to Power Grid Corp, so on and so forth. Now, this Mr. X, now he has invested and done everything with the 5 lakh rupees. Now he decides to divide the portfolio into, let's say, 10,000 units. Now this 10,000 number, this is an arbitrary number. He can divide it into 1,000 units. He can divide it into 500 units. He can divide it into 1 lakh units. This is totally up to him. So since he's decided to divide it into 10,000 units, now 5 lakh divided by 10,000, the price of each unit comes out to be rupees 50. And this rupees 50 is the NAV of this particular mutual fund. Now, these 5 people who have invested, now these will get units allotted to their account depending on the NAV. So since the intern has invested 20,000, he'll get 400 units. The senior professor has invested 3 lakhs, so he'll get 6,000 units. Similarly, when you go and buy a mutual fund, you get certain units allotted. And those units are basically your investment divided by the NAV of that particular day. Now, here in this example, we said that Mr. X, he invested it in 5 stocks: Reliance, HDFC, ITC, Tata Technologies, and Tata Motors. So since he was investing in stocks, the mutual fund he made, that will be known as a equity mutual fund. Similarly, there may be another fund manager. Let's say this fund manager is Mrs. Y, and she does not invest in stocks. Instead, she invests in bonds and government securities. So since she is investing in all debt instruments, her mutual fund will be a debt fund. So similarly, to cater the needs of different people, different types of mutual funds are there. So in total, if I go by the latest SEBI circular, almost 30 subcategories of mutual funds exist. It is very hard to discuss all of these, and some of those categories are obsolete also. So we'll basically try to cover all the important ones. So equity mutual funds are basically that are primarily investing in stocks. Debt funds are basically that invest primarily in debt instruments like bonds. Then we have hybrid mutual funds, that is a mix of equity and debt, solution oriented, and other schemes. So coming to equity mutual funds are basically mutual funds that are investing majorly in stocks. So again, in this, we have large cap, mid cap, and small cap funds. So if the fund manager is only investing in the top 100 companies, then that mutual fund is a large cap mutual fund. If he is investing in mid cap companies, that is 101 to 250, that becomes a mid cap fund. And if it is small cap companies that he is investing in, then it becomes a small cap fund. Similarly, there's a flexi cap fund. This is a very popular category. Here, the fund manager is not, he is not bound to invest in a particular market cap. He can invest in any of these three categories, large, mid, small. He can invest in any of these categories, and he can, he's free to invest 50% in small cap and only 10% in large cap and mid cap. He can do it like that. So the benefit of flexi cap fund here is that when you are investing in a flexi cap fund, since the market moves in cycles, in certain cycles, large caps have a bull run. In certain cycles, small caps have a bull run. So here your fund manager will allocate your money accordingly, and he'll try to gain a better return than what Nifty would have given you. So this is what flexi cap means. Some other categories of equity mutual funds are these. Now we won't be discussing all of them in detail. I'll talk about sectoral funds, sectoral thematic funds. Let's say right now EVs are in trend. So let's say I start a mutual fund and I say that I'll only invest in companies that are making EVs. So the theme here is EV. Now, since I'm making a mutual fund based on a theme, that becomes a thematic mutual fund or a sectoral fund. Similarly, ELSS, that is equity linked saving scheme, that used to be a very famous category of mutual fund. Why? Because under the old tax regime, it used to give a very good tax benefit and very good returns also. But now, since the government is pushing the new tax regime so much, I believe in a couple of years, old tax regime might disappear completely. So I won't be discussing this in detail. Coming to debt mutual funds. So before we go into debt mutual funds, I would like to tell you a little bit about debt. So what actually debt funds mean? So suppose right now you want to buy a car. The cost of car is 30 lakhs. Now you have 10 lakh in savings, and now your remainder amount is 20 lakhs. So you have two options. You can either go to a bank and take a 20 lakh loan. And the second option is you go to 20 different people and you say, okay, each of you give me 1 lakh rupees and I will repay you after fixed time, let's say 5 years. So in the first option, in this option, with the bank, you will sign a agreement. And in this second option, you will also sign an agreement, but that agreement with all those 20 different people, that is actually known as a bond. This is a very simple definition of a bond. So let's say tomorrow Mr. Ambani comes to you. So Mr. Ambani says, hello doctor, I want rupees 1 lakh and I'll pay you back tomorrow. So now what are you thinking? You're thinking Mr. Ambani is a very reputed person and the loan that I'm giving him is also of very short duration. He's just paying it back to me tomorrow. So it's a very short duration loan. So it's a very low risk situation. So what you say to him? Okay, I'll give you the loan at 5%. So you have kept the rate of loan very, very low. Okay. So similarly, in this situation, your risk is low, but here your returns are also low. Now, suppose Ambani comes back to you after a couple of months and again he says, I want 1 lakh rupees, but I'll pay you back after 7 years. Now what you're thinking? Even though Mr. Ambani is a reputed man, the loan duration is very, very long. Maybe something bad happens to him. Maybe his son throws him out of business. So this is a very high risk situation. So in this high risk situation, since I'm risking a lot, now I would want more returns. So what do you say? You say, okay, I'll give you a loan at 8%. You have now increased the rate of loan from 5% to 8%. Now in third situation, suppose this guy comes to you. Now this guy, I hope everybody knows. Now this guy says, I want a 1 lakh loan and I'll pay you back in 1 year. Now what do you think? You're thinking this guy has defaulted on his loans previously. So this is a very high risk situation for me. Now what do you say to him? You say, okay, I'll give you the loan, but the loan will be at 14% interest rate. So what we are learning here, whenever we are lending, the rate of interest, that depends on the credibility of the person or the credibility of the company that is taking the loan, as well as the duration. So debt funds are basically classified based on these two parameters only. Now just look at the left hand side. These all funds I want to look at. Here on top we have overnight, on the bottom we have long duration. From top to bottom, in all of these, the duration of the loan is increasing. Overnight funds invest in loan or debt instruments that have an expiry of 1 day. Okay. Like in the first example we show, you are giving a loan today and your repayment is coming tomorrow. Long duration funds have an expiry of 7 years or more. So that means the loan is being repaid in at least 7 years or more duration. So here the duration is increasing. With the increasing duration, risk is also increasing. So rate of long duration funds, the rate of returns you will get. Think of yourself as a bank or a lender. The rate here our rate was 5%. Here our rate was 14%. Okay. So the rate here increases as the duration of the funds gets higher. And the risk also increases. As we go down this line, the risk also increases because in longer duration, the risk of default is a lot more. So this is something about debt fund. Now coming to hybrid funds are basically a mix of equity and debt. If you don't want to, go in total equity or total debt, you can invest in hybrid funds. So the nomenclature here is based basically on how much debt is there or how much equity is there. If mutual fund is majorly constituting debt, that is more than 75%, it becomes a conservative fund. If it is majorly constituting equity, then it becomes an aggressive fund. An aggressive hybrid fund would invest 65 to 80% in stocks and only say 35 to 20% in debt instruments. A balanced fund is basically 50-50 debt and equity. So these are some of the hybrid funds. Now, coming to our fourth category, that is index funds. Index funds are very important. And I would say in this entire discussion of today, index fund is the most important mutual fund that you can invest. Why? Because in earlier example, what we gave our money to Mr. X, then Mr. X did the research and he suggested us a portfolio. He suggested 5 stocks and based on his research, our money is getting invested. In index fund, there is like the role of fund manager is very, very negligible, almost nil. Why? Because these funds, they are basically based on an underlying index like Nifty or Sensex or any other index. So what is this? This is basically Nifty 50. So this is of constituents of Nifty 50, top 10 constituents of Nifty 50 in 2024. So in 2024, right now, 13% of Nifty is by weightage is HDFC Bank and almost 9% is Reliance, then 7.5 is ICICI Bank, then there is Infosys, ITC, all top blue chip companies are there. So this percentage, the weightage you can see, this changes with the market cap. If suppose, let's say HDFC is performing very, very good, then this weightage will keep on increasing. But if HDFC is not performing good, this weightage will go down. So this is how index works. And this list gets updated every 6 months. So index funds, let's say we have a mutual fund that is a Nifty 50 index fund that is based on this index. Here also, it will exactly mirror the index, and the returns we are getting on the index, will get exactly the same returns with that index fund. Here, the index fund is not dependent on the fund manager. That is why it is also known as passive fund, because the fund manager is not doing any research. Since the fund manager is not doing research, he's not charging a lot of amount. He's just, basic maintenance amount he's charging. So these funds also have an added advantage of a low expense ratio. So even Warren Buffett, who is you can say, one of the great investors of our decade. So he has also, said that if you invest in, if you do an SIP in index fund over 10 years, you will do better than 90% of the people who start investing at the same time. And here by investing, he is meaning all the people who are doing mutual funds, stocks, technical analysis, fundamental analysis, all of it. You'll do better than 90% of those people just by investing in index funds. That's how powerful an index fund is. Why? Because over multiple decades, we have seen that index funds have given a return of at least 12 to 14%, and this is regular. Okay, so this index funds they have given, if you take any 5 to 7 year period, index funds would have given a return of this at least 12% on your investment. So for anyone who is new, anyone who is starting today to invest, the first mutual fund you should invest in is a Nifty 50 index fund, because advantage is you're basically getting invested into the top 50 companies. Second advantage is there is no bias, no chance of any human error. If out of these 50 companies, the one company is doing very, very badly, maybe in 6 months, it will get outside of the index itself. If some company is growing at a very, very fast rate, it will come inside the index. So your fund will always be constituting of the top 50 companies that are there in India. So now how do you select mutual funds? So what are the things that you should look for? So first thing that you should look for is category of fund. That we have already, I have told you what different categories of funds are. Just a second. So first thing you should look for is category of funds. Then all of these things I will discuss, but important thing also is the fund manager and how do you do research about the fund manager. So whichever mutual fund you are investing in, just Google it, open its page, you'll see who are the fund managers. Just Google his or her name. If he has done any front running or any other scam in the past, that news will come. So you'll get an idea, okay, this fund manager, he has a shady past, so maybe I should be careful about investing with him. Now, coming to goals. Now, riskier investment means equity investment, especially small cap or mid cap investment. So if you're selecting a small cap fund or a mid cap fund, right now, if you go on any mutual fund website, you'll see what are the top funds. It will either be a thematic fund or a small cap fund. They are usually giving returns in past 3 years, 20 to 30%. So that becomes a very lucrative thing for new people to invest. But when you see, these are riskier investment, because small cap companies, they can also fall by almost 50% if there is a market crash. Your top cap or the large cap companies, if they fall by 20%, small caps will fall by 50%. So going by this, if you are investing in riskier investments like small cap, you should always aim for long term, at least have a horizon of 15 to 20 years. For short term goals, let's say you want to buy a car in 3 years or you want to buy a house in 5 years, always go for safer instruments like debt funds. Then here are two examples, two screenshots actually. One is Motilal Oswal Midcap Fund Direct and one is Motilal Oswal Midcap Fund Regular. So both are same funds. And this also Rasik sir had told in his lecture earlier that always invest in direct fund. So difference here is this two words, direct and regular, but this is a very important difference. See, earlier what we are doing is, as an investor, we are buying directly from the AMC. So when you are directly buying from the AMC is only charging their fees. So this, when you're directly buying, your expense ratio only includes this fee and this becomes a direct plan. Sometimes AMC will say that, okay, I have launched a new mutual fund, but to distribute it, to let more people know about it, let us hire some middlemen who will go to people and who will advertise about our mutual fund. So in this case, AMC will charge its fees, but middleman will also charge his commission. So here your expense ratio will be the commission plus the fees of the AMC. So in this case, in regular plan, your expense ratio increases. So again, in this example, we can see that in the direct fund, our expense ratio is 0.6%, while it is 1.65 in case of regular fund. So almost a 1% difference, and this 1% difference is very, very much. If you let's take an example. If you are doing a 25,000 SIP and you are investing in for let's say 20 years, then by 1%, you are making a loss of almost 36 lakhs. So is lower expense ratio always better? So if you're, let's say if you're choosing between direct and regular funds, we already know that, okay, we are getting the benefit of lower expense ratio with direct fund. In case of index funds also, because in index funds, nobody is choosing the stocks. Your fund manager is not choosing the stocks. So in index funds also, lower expense ratio is better. Suppose you have two AMCs. Suppose you have a HDFC Nifty 50 index fund and the other is Parag Parikh Nifty 50 index funds. One has an expense ratio of 1% and second one has expense ratio of 0.2%. Always choose the one with a lower expense ratio because the constituents of the index fund will remain the same. But if it is an active fund, then expense ratio does not matter, because here maybe if a fund is giving a return of 16%, but the person who is the fund manager is charging 2% return, maybe he's a very good fund manager, maybe he has a very good track record. So for active funds, expense ratio doesn't matter a lot. But for passive funds and for regular versus direct, we always choose funds with a lower expense ratio. Now coming to exit load. So certain mutual funds, you'll see this in mutual fund description, certain mutual funds will charge a certain amount if you withdraw or sell the mutual fund before a specific period. So this is again example of Parag Parikh, and in this Parag Parikh example, we see if we withdraw this fund before 2 years, it is charging us 1%, and if we withdraw us before 1 year, then it is charging us 2%. So this is exit load. So if you are, trying to invest between two funds which are comparable, choose the fund with a lower exit load. Also, if you have a short term, you only want to invest for 1 year and you have chosen a fund, but always be aware that it should be without any exit load. So now in this picture, on the left side, we have a collection of shoes, 4-5 shoes. Now all of these shoes are formal shoes. And on the right side, we have 4 different types of footwear. One is formal, one is a sneaker, one is running shoes, and others are slip-ons. So what is the difference? Difference here is, if you are going to buy shoes, the practical choice would be this, because for different occasions, you'll need different types of shoes. You cannot survive only on formal shoes. So similarly, while choosing mutual funds, there is no point in selecting 2 or more funds of the same category. Like you should not go and select, like I have selected HDFC large cap mutual fund, then I selected Parag Parikh large cap mutual fund, then I also selected Axis large cap mutual fund. You should not do it like that, because within large cap, the fund manager is only allowed to invest your money in 100 companies. So, and one mutual fund usually has a folio of 50 to 60 companies. So between 2 or 3 large cap, you will basically have a 60 to 70% or even more overlap. Even between large caps and Nifty 50 index funds, you have at least an overlap of 50 to 70%. And so that is why you should either select a large cap fund or a Nifty 50 index fund. You should not select both, and never select 2 funds of the same category, because they won't, it is just like buying a black shoe from one company and then going to a different shop and buying same formal black shoe from another shop. No point in having 2 or 3 things of that will serve you the same purpose. Now, flexi cap funds have an overlap of 20 to 40% with Nifty. So on an average 30% we overlap. That is still acceptable. So we can choose both. But between large cap and Nifty 50, you can choose either. Whichever you like, you can choose either. Now, there are certain things that you should, that you should try to ignore while selecting mutual funds. First of them is NAV. Now, a lot of people believe that if a fund has a lower NAV, it is better. This is totally an irrational thought, completely irrational, because earlier we saw that what Mr. X was doing, he arbitrarily decided how many units he wants to have in his mutual funds. So NAV depends on the number of units, and the number of units that is entirely dependent on your fund manager. So NAV does not matter. So never invest based on NAV. If a mutual fund has high NAV, you should not avoid it, or if a mutual fund has a low NAV, you should not necessarily buy it. Second thing is past performance. So when you go and select a mutual fund, on any website, you go to ET Money, you go to Kuvera, you go to Grow, you go to any website, all of the mutual funds, they will highlight, okay, we have given 20% return in 1 year, 25% return in 3 years. Now, this is all the past performance. This performance has already taken place. And why they are highlighting it right now? Because in last 3 to 5 years, COVID happened in 2020, and post-COVID, a lot of stocks have jumped. A lot of stocks have doubled, tripled from their COVID levels. So now in mutual funds also, we are seeing this 20, 30, 40% returns, which is unrealistic in my experience. Over a long term, if you say 15 to 20% horizon, if you take, then if you are going to make, let's say 15 to 16% returns, this is what your aim should be. Total aim should be this, over a 15 to 20% horizon. But if you right now, if you go, you'll see mutual funds giving 30% returns also. So all of these are erratic due to post-COVID returns. So you should not look at that. Now, here is an example. Now we have player 1 who has 3 centuries in 123 matches, and we have player 2 who has 1 century in 125 matches. So if we go by past performance, then this player is a better player. Now, if I reveal who these players are, I guess the point is quite clear. So how many mutual funds you should have? Now, many people have 10, 15, 20 mutual funds. So if you have that many mutual funds, basically you are investing in all the companies that are there. So keep your mutual fund investments to a minimum of 5 to 6. 5 to 6 is the maximum. So the first fund that I already told you is a Nifty 50 index fund. Or if you don't want to invest in index funds, then you can go for a large cap fund. Both will give you around 12 to 14%. Second fund that you should invest in is a flexi cap fund. Why? Because flexi cap funds, they give a 1 to 2% or 2 to 3% alpha over your index. Then for long term, depending on your age and depending on your risk appetite, you can have either one small cap or a mid cap fund. And the allocation of your total asset should be around 20 to 30%. Why? Because these are riskier investments, but in long term, they give very good returns. They can give you at least 20 to 25% returns in long term. And what will happen is, to your overall portfolio, they will give you a very good boost. So if your overall portfolio is, let's say, without a small cap is moving at 13%, with a small cap, it will move at 14 to 15%. Then the fourth fund that you must have is a liquid fund. Liquid fund, like none of the speakers have discussed this, but liquid fund is very important because liquid funds basically give you a return of 5 to 6%, but you can redeem them instantly. Like you can redeem them within couple of hours. And sometimes, let's say tomorrow market crashes, tomorrow war occurs and market crashes by 20, 30%. Now there occurs a very good opportunity to invest, and to capitalize that opportunity, you must have some funds, and those funds, those should be kept in liquid funds, because liquid funds, at least they are giving more returns than your bank savings account. So liquid funds, you should always keep as a lump sum opportunity. Then this debt or hybrid fund, if you have a short-term goal, like you want to buy a house or a car within 3 to 5 years, then you can go for a debt fund. And sectoral fund, you should, this is a advanced topic. Sectoral fund, sometimes we do in for sectoral analysis and for sector rotation, we do it. It is a slightly advanced topic that is we have not discussed it today. So maybe if we get chance to discuss it later, we can discuss it. But yes, the sectoral fund, it is basically an investment for 6 months to 1 year, where we identify a particular sector which we are expecting to grow at a good rate in the next 5 to 6 months, or let's say a year, and we invest some amount and then we get good gains from it. So that is what's the purpose of sectoral fund is. Now, investment strategy, I'll just take a couple of minutes. Investment strategy, SIP. Now, what SIP means? So SIP is investor chooses to invest in a mutual fund scheme a fixed amount, let's say 20,000 or 25,000 over a fixed interval, usually months. Like you're investing every 1 month, you're investing 20 to 25,000. So how this helps? Since you cannot time the market, but by doing SIP, what you are doing is you are avoiding the risk of buying when the market is at its highest. Second advantage is you are buying more shares when the price is low and fewer shares when the price is high. So basically your investment is getting averaged out. So this is a very effective tool for removing some of the emotional barriers and biases that are existing. Now, portfolio is like a bar of soap. The more you handle it, the smaller it gets. So you should not tinker a lot with your portfolio. You should keep things simple. Do not try to, buy today, then buy another, buy another mutual fund tomorrow, then sell mutual fund after 1 month. You should at least have a horizon of at least 5 years. Even if you have at least a horizon of 5 years, then you will manage to get decent profits. So with this, I conclude. Thank you, everyone. Thank you for listening. If you want to connect with me, you can find me on Twitter, and you can text me on WhatsApp if you have any queries regarding mutual funds. Thank you.
Thank you, sir, for the wonderful talk. Before Mr. Singhvi joins us, there are some questions the audience has asked. I will just quickly read out. First, what I noted is few questions for Biyani sir. Sir, are you there?
Yes, very much there.
So one question asked is how do we identify the weakness on the chart, and if you can suggest any book that the audience can refer to, especially for technical analysis.
There are certain ways of looking at the weakness. The time is very short, and basically, I didn't wanted people to get confused. They should get a feel of it. One thing that I shared, that highest volume, after a long trend, highest volume is the selling climax. That no smart money does that. But then there are certain ways of finding the weakness in the stock actually.
Okay, sir. So this is for you and Dr. Tanmay as well. Sir, how do we recognize a good stock, and that sometimes a penny stock which may be fundamentally good rises out of proportion? So how do we differentiate it or identify such stocks?
If you ask me, I don't look at the stock less than 50 rupees. They are highly manipulative, and means out of maybe 10, one might become a hit, but 9 of them we lose money. So my filter is that less than 50 rupees, I don't see them. Less than 200 moving average, I don't see them. Simple.
If you look at it fundamentally, the criteria would be to see the market cap of the stock. If the market cap is less than 1000 CR, then probably you are looking at a small cap, and if it is less than a 500 CR, then probably you are looking at a micro cap. And if there is some fundamentally good stock, and if it has given a good run, obviously the valuations would be very high. So I think whenever the valuations are high and it is a micro or a small gap, you need to be very, very cautious about it because manipulations can be there on that end. So that's the criteria for me.
Thank you, sir. And so we also have a question with respect to liquid funds and FDs with respect to the current taxation considerations. So about that.
I think I answered that in the chat box itself. So with the current change in the tax regime, what has happened is the indexation benefit on the debt funds have gone. So if you're holding it for long period, that doesn't make it a wiser choice. But then the flexibility that offers over the FD, which we do conventionally, is whenever you are breaking your FD prematurely, you will attract a 1% penalty. But on liquid funds, you don't get that penalty. The gains are both the gains in liquid funds and in FDs, both are taxable at the slab rate. So the flexibility is the point to decide between FDs and liquid funds.
For Dr. Prashant, sir, what are arbitrage funds, sir?
Arbitrage funds, to be very simply say, let's say you have a stock that is trading at 1000 rupees in NSE and in BSE it is trading at, let's say, 1005 rupees. So this difference of 5 rupees, if you buy a stock in BSE and sell it immediately in NSE, you'll get a profit of 5 rupees. So sometimes this difference in price exists. And when you capitalize on that price, that becomes arbitrage. And mutual funds that identify such differences and capitalize on this is known as arbitrage funds.
Thank
So
you.
basically, it's a type of debt fund only.
Yeah, so Mr. Anil Singhvi has joined and we welcome him from SRCC Masterclass. I think all of you know Mr. Anil Singhvi. He is chief editor of G Business. Earlier, he was with other companies. He is basically chartered accountant and good friend of mine. We know each other for now, I think more than 16 years. And we welcome him once more. And basically, this session will be question answer. Any one of us can ask the question, but if it is rotated through moderator, it will be a good idea. So welcome, Mr. Anil Singhvi, and Rujul and Harick are going to moderate the question answer session. Yeah.
Good evening, sir. We welcome you. I am Dr. Rujul Jhaveri. Sir, so here as doctors, we are in a pediatric specialty hospital in SRCC Children's Hospital, and we have a relatively younger generation of doctors in a younger population as well. So the first question which most of the doctors have put up is, so for someone who've not started their financial literacy, I would say the journey, what should be the first step? And the second part, which most of the other doctors have asked, is there any age-specific allocation of the various financial instruments that we as doctors should follow?
Okay. So first and foremost thing, when should one start? So the right time to start your investments was yesterday. If you didn't do yesterday, then it's today. And if you didn't do today, then it is not too late to start tomorrow, but it should be tomorrow, not beyond tomorrow actually. So first and foremost, that is important thing. Secondly, how to start. Just like, if you want to, it's just like me. Whenever I feel little weak or I'm in like fever kind of situation or cold or cough, I know that I can take cold and flu kind of medicine or something, or maybe I can have, if I have body pain, then a Combiflam is good enough. But when I know that now fever is 100, 200, 3 or whatever, then I must call up Rasik Shah sir and I must ask him, sir, क्या करना है? तो अब fever जैसा लग रहा है, right? तो अगर छोटी मोटी चीज है तो मैं खुद ही डॉक्टर हूँ, हल्का फुल्का. बट अगर लगता है कि भाई वाकई में इश्यू है, प्रॉब्लम है, तो फिर we should consult the right person actually. We should consult the right person. तो सिमिलरली वैसा ही है कि यू नो योर जॉब बेटर। तो जब हमें जरूरत होती है कि कोई इश्यूज है रिलेटेड टू एनी इलनेस और समथिंग, वी गो टू द राइट डॉक्टर। Similarly, one should start with the right kind of advisor or consultant who can guide you guys related to your investment needs, your objectives, and uh, your risk, your time horizon, your return expectation. All these should be matched, and accordingly, a portfolio can be constructed. So, जैसे हम लोग कहते हैं कि हम जब डॉक्टर के पास आते हैं तो हम सब खुल के बताते हैं, तो यहाँ यहाँ ये प्रॉब्लम है, इतने दिनों से प्रॉब्लम है, ये हो रहा है, वो हो रहा है, देन यू कैन गाइड अस राइट इन राइट वे, इफ नीडेड सर्टेन टेस्ट एंड एवरीथिंग। Similarly, when you appoint an advisor or you meet someone who can design your portfolio or who can fulfill your investment needs, आप उनको खुल के बताइए भी कि आपको कितना रिस्क लेना है, क्या करना है, क्या नहीं करना है। अकॉर्डिंगली वो आपके लिए एक प्रॉपर पोर्टफोलियो बना के देगा। तो दैट इज वन थिंग। तो द बेस्ट पार्ट इज यू शुड गो टू एडवाइजर एंड स्टार्ट डूइंग इट। अब रहा सवाल, कुछ लोग ऐसे होंगे जिन्हें थोड़ी बहुत समझ है फैमिली बैकग्राउंड की वजह से, और मे बी बिकॉज ऑफ देयर अंडरस्टैंडिंग अबाउट द मार्केट्स और अबाउट इन्वेस्टमेंट्स एंड ऑल, so they can start in whatever way they are comfortable with. रहा सवाल, what is the right age or to invest? See, investment तो आपको हर एक एज में रखना है, whether you are 30, 20, 60. Only thing is your asset allocation is different. आप जैसे जैसे आप एज में ज्यादा बढ़ेंगे वैसे वैसे आपका एसेट एलोकेशन इक्विटी में कम होगा, क्योंकि इक्विटी थोड़ी रिस्की एसेट क्लास है। जैसे आप यंगर एज में रहेंगे आपका इक्विटी में अलोकेशन थोड़ा बेहतर होगा। जितने ज्यादा यंग है, इक्विटी में भी जो रिस्की इक्विटी है जैसे कि स्मॉल कैप या मिड कैप स्टॉक्स है, उनमें आपका अलोकेशन ज्यादा होगा बजाय लार्ज कैप के। जनरली एक रूल है, रूल ऑफ 100, लाइक यू विल लिव 100 years, ओके। So whatever your age is, says your age is 35. So 100 minus 35 is equal to 65. So your 65% of your portfolio should be into equity. जितनी आप, say suppose you are 20, then 100 minus 20, 80% of your portfolio should be into equity. If you are 60, then you should not invest more than 40% of your total savings into equity. This is a general rule. It cannot be applied to everyone depending on their risk appetite, their financial requirement and everything. But generally अगर आपको एक बेसिक रूल लेना है तो ये एक रूल है जो आप अप्लाई कर सकते हैं। अब एज का जो सवाल है डॉक्टर, उसमें मैं आपको एक बात बोलना चाहता हूँ। पहले क्या होता था, पहले सिस्टम कैसा था कि बड़ी फैमिलीज होती थी, जॉइंट फैमिलीज होती थी, HUF होते थे, और एक एक फैमिली में 8-10 बच्चे होते थे। 2 जनरेशन पहले तक आपकी हमारे से एक जनरेशन पहले में 4-5 बच्चे होना नॉर्मल था, उससे एक जनरेशन पहले में 8-10 बच्चे होना नॉर्मल था, बिकॉज दैट पॉइंट इन टाइम देयर वाज शॉर्ट ऑफ मैन पावर, एंड इफ यू वांट टू डू एनीथिंग बिग यू नीड योर ओन पीपल, योर फैमिली पीपल। और दूसरा ये था कि तब आपकी जो वो एक्सपेक्टेड एज है वो बहुत कम थी, लोग जल्दी डेथ हो जाती थी, वो सारा है। अब विद मेडिकल साइंस हैज इम्प्रूव्ड सो मच, यू गाइस आर वेल इक्विप्ड, अच्छा ट्रीटमेंट करते हैं, तो अभी प्रॉब्लम है कि लाइफ एक्सपेक्टेंसी बहुत बढ़ गई है। तो पहले क्या था, पहले और अब में एक बड़ा डिफरेंस है विच वी मस्ट अंडरस्टैंड एवरीवन। लाइक अर्लियर द बिगेस्ट रिस्क, लाइक मुझे आप पूछेंगे मेरी लाइफ में सबसे बड़ी रिस्क क्या है, मेरी लाइफ में सबसे बड़ी रिस्क है कि मेरी लाइफ ही सबसे बड़ी रिस्क है, मेरी लाइफ है कि नहीं है, अगली सांस मुझे आएगी नहीं आएगी, कल मैं देखूंगा नहीं देखूंगा, वो सबसे बड़ी रिस्क है। उसके अलावा दूसरी बड़ी सबसे रिस्क है कि मेरे पास पैसा होगा या नहीं होगा। तो नाउ थिंग्स हैव चेंज ड्रामेटिकली विद आवर स्टैंडर्ड ऑफ लिविंग हैज गॉन अप। अर्लियर द बिगेस्ट रिस्क वाज रिस्क ऑफ डाइंग अर्ली। What if you die early? Who will take care of your family after you? That was the biggest risk. Now the things have changed. Now the risk is other way. Now risk is what if you die, if you live longer. It's not risk dying early, it's living longer. Say suppose you are practicing doctor, आप 60 साल तक प्रैक्टिस करेंगे, 65 करेंगे, ज्यादा से 70 तक करेंगे, कितना करेंगे? What if you live 100 years and you want to maintain the same lifestyle? ठीक है, अब एक्सपेंसेस आपके बढ़ रहे हैं, नो डाउट डॉक्टर्स को वो इशू नहीं आता है मेडिकल एक्सपेंसेस वगैरह, बट इन जनरल आप जो स्टैंडर्ड मेंटेन करते हैं, अगर आपको 30 साल बिना कमाए हुए आपने जो 60 साल 65 साल तक जो कमाया है उसी के बेसिस पे अगले 30-35 साल निकालने हैं, तो फिर ये बहुत जरूरी है कि यू हैव सफिशिएंट इन्वेस्टमेंट्स विद यू विच कैन टेक केयर ऑफ योर एवरीथिंग इन योर टफ टाइम और ओल्ड एज टाइम। और सिंपल सी चीज है, पैसा अगर अपने पास में है ना तो सब लोग डॉक्टर भी हॉस्पिटल में भी आपका ट्रीटमेंट होगा, आपके बच्चे भी आपका ध्यान रखेंगे, जो नहीं आपको पहचानते हैं वो भी आपके रिलेटिव्स बन जाएंगे, और अगर पैसा नहीं है तो जो आपको जानते हैं वो भी मुंह छुपा के भाग जाएंगे, बोले यार जाने तो बुढ़ा है, अभी जाएंगे, खर्चा होगा, टाइम पास करेगा, ये सारा है। तो द बिगेस्ट रिस्क इन लाइफ टुडे इज व्हाट इफ यू लिव लॉन्गर टिल 100? दैट क्वेश्चन मस्ट बी आंसर्ड बाय ईच एंड एवरीवन. दैट इज द मोस्ट इंपॉर्टेंट थिंग. जी.
थैंक यू सर. सर, ऑन द corollary and similar lines, जैसे आपने कहा, the earlier the better is what we understand.
Yes.
So if we so earlier the better में what is the earliest age? My question is more towards if we have kids, and what would be the right age to start training them in terms of financial literacy, to teach them the basics about what is not taught in the current curriculum of schools and colleges, even if they may enter or take up a field later which is purely related to finance, but as basic. For example, I have an 8-year-old child. What would be the right age to start training them? And are there any institutions, any platforms where we can get this knowledge?
Yes, definitely. तो पहली चीज तो बच्चों को स्टार्ट करने के लिए व्हाट इज द राइट टाइम. सो our legal system says you can open any kind of investment account in the name of minor. अगर आज बच्चा पैदा हुआ है, आज से आप उसके नाम पे इन्वेस्टमेंट करना शुरू कर सकते हो. व्हाट डज इट मीन? इट मीन्स ईच एंड एवरी माइनर शुड ऑल्सो इन्वेस्ट. अगर उसको इन्वेस्टमेंट अलाउ है तो अलाउ इसी यही सोच के किया कि बच्चा पैदा होते ही आप उसका इन्वेस्टमेंट कर दीजिए, कर सकते हैं, कोई दिक्कत नहीं. पॉइंट नंबर 1. नाउ व्हाट शुड यू डू विद योर किड्स और योर ग्रैंडकिड्स? सबसे पहली चीज, दे मस्ट अंडरस्टैंड द इम्पोर्टेंस ऑफ मनी. वो सबसे इंपॉर्टेंट है. और इम्पोर्टेंस ऑफ मनी कैसे आएगी? आप उनको पॉकेट मनी देते हैं, बिल्कुल दीजिए, पॉकेट मनी दीजिए, बट उनको ये कहिए कि जहां भी आपने पॉकेट मनी आपने खर्च किया है उसका हिसाब रखिए. तो मैं बताता हूँ, लाइक माय फादर, ही वाज अ बैंक मैनेजर, ही यूज्ड टू गिव मी पॉकेट मनी एंड ही यूज्ड टू टेल मी वन थिंग, जो भी तुमने पॉकेट मनी खर्च किया उसका हिसाब मुझे दे दो. एंड हिसाब लिखने के बदले में मुझे क्या मिलता था? बिकॉज दिस इज हाउ यू नो यू डेवलप ए हैबिट ऑफ रिमेम्बरिंग थिंग्स फर्स्ट, then spending carefully. Third, saving also. How? So what he used to do is, अनिल, मुझे सपोज 10 रुपए पॉकेट मनी मिला, मैंने 10 में से 9 रुपए, 8 रुपए, 5 रुपए जो भी खर्च किए, उतना पैसा मुझे बोले कि ये तेरा है ना सेविंग बैंक अकाउंट है, जितना तूने खर्च किया, तूने जो हिसाब दिया उतना तेरा अलग से ये तेरे बैंक में डाल दिया. तो नाउ आई फील दैट अरे वाह, मेरे मुझे पॉकेट मनी भी मिल रहा है, जो मैंने हिसाब रखा है उसका मेरी सेविंग भी हो रहा है, एंड एवरी मंथ आई कैन सी हाउ मच इंटरेस्ट इज इंक्रीज. So this is how importance of money, हिसाब रखने की आदत, spending carefully, investing regularly, generating income out of small investments. This is how I learned actually, and which is very easy. Second thing is you should always teach your kids how to do banking transactions. जितना जल्दी आप शुरू करेंगे, because आपकी मेरी लाइफ में हम में से सारे जितने लोग हैं, हमने सबने जब भी पहला चेक लिखा होगा या पहली स्लिप बुक भरी होगी तो हमने पक्का गलती की होगी. एक बार में हमने कभी एक ने भी कोई भी ऐसा नहीं होगा जिसने चेक सही लिखा हो, राइट? सो हम वो गलती जितना जल्दी कर ले उतना बेहतर है. नाउ इट इज ऑफ कोर्स ऑनलाइन वगैरह काफी कुछ हो गया तो आजकल इतनी जरूरत नहीं पड़ती, बट स्टिल दे शुड नो द बैंकिंग, और वो सब उनको करना चाहिए. तो वो एक दूसरी चीज है, आप उनको सिखाइए. तीसरा, इन्वेस्टमेंट में सिंपल सी चीज है, आप बर्थडे पर उनको गिफ्ट देते हैं, अपने बच्चों को आप देंगे, पेरेंट्स देंगे, ग्रैंड पेरेंट्स देंगे, अंकल आंटी सब देंगे, सब दीजिए. फिर गिफ्ट के साथ एक काम और करिए. से सपोज आपको अपने बेटे को आईफोन देना है कि भाई तू 16 साल का हो गया, आईफोन 16 ले ले चल, ठीक है ना, दिस इज ऑन योर 16th बर्थडे माई गिफ्ट. बट उसके साथ में उसको एक गिफ्ट कोई और ऐसा दीजिए कि तेरे लिए मैंने ये स्टॉक खरीदा है, या तेरे लिए मैंने इस म्यूचुअल फंड में पैसा लगाया है आज तेरी बर्थडे पे. और आप देखिएगा 3 साल, 2 साल, 5 साल बाद जब वो देखेगा यार मेरा तो आईफोन तो बेकार हो गया, कुछ काम का रहा नहीं, नए नए रोज आ रहे, लेकिन मेरा जो वो इन्वेस्टमेंट हुआ था वो डबल हो गया, वो 3 गुना हो गया. देन ही विल रियलाइज. सी, जो आपने पूछा ना कि कौन सी इंस्टीट्यूशन है, कहाँ से ये सीख सकते हैं, द बेस्ट इंस्टीट्यूशन इज पेरेंट्स. जो चीज पेरेंट्स सिखा सकते हैं वो कोई और नहीं सिखा सकता. और एक और चीज मैं बता दूं, भाषण से कोई नहीं सीखेगा. आप बोलोगे ये करो वो करो, करके दिखाना पड़ेगा. आप करेंगे ना और आप करके दिखाएंगे ना तो बच्चे अपने आप सीखेंगे. तो वी हैव टू बी प्रैक्टिकल विद किड्स. उनको इम्पोज करेंगे कि बॉस तुम्हें ये करना है, ऐसा करना है, वैसा करना है, तो दैट विल नेवर हैपन. बट व्हेन वी डू इट, आवर किड्स विल फॉलो दैट. सो आई थिंक आफ्टर सर्टेन एज जो कुछ भी इंस्टीट्यूशन होते हैं, जो कोर्सेज वगैरह वो होते हैं, वो तो बहुत सारे हैं आजकल. एक्चुअली स्टूडेंट्स कम है, कोर्सेज ज्यादा है, और ऑनलाइन इतने सारे हैं. ईच एंड एवरी वन इज बाबा. दे नो एवरीथिंग अबाउट मार्केट्स. द वर्स्ट पार्ट इज, रसिक भाई मैं आपको बताऊं, आई वॉज इंटरव्यूइंग अ पर्सन डे बिफोर यस्टरडे फॉर अ जॉब. दिस गाय वॉज हार्डली हैविंग 1 year's एक्सपीरियंस. मैंने उसको पूछा भाई क्या करते हो. मैं इस ऑर्गेनाइजेशन में काम कर रहा हूँ. ओके, मैं बोला क्या करते हो, व्हाट इज योर प्रोफाइल. I advise my clients. मैं बोला advise what to buy and what to sell, about what stocks. मैं बोला तुझे कितना टाइम हुआ कहीं जॉब करते हैं. बोले सर दिस इज माय फर्स्ट ईयर. मैं तू पहले साल में एडवाइस करता है. मैं बोला भगवान तेरा और तेरे क्लाइंट का मतलब बचा है बॉस. ये दिस इज हाउ इट इज एक्चुअली. सो पीपल जस्ट graduated or just out from any institution, they start advising. This is the worst part about our market. And वो हम लोग बोलते भी है ना कि सारे जो लोग मर्सिडीज में जाते हैं ऑफिस, वो उन लोगों से एडवाइस लेते हैं जो लोकल ट्रेन्स में आते हैं, है ना. प्रॉब्लम वो है. और आफ्टर अ वाइल जिनके पास एक्सपीरियंस है उनके पास पैसा आ जाता है, और जिनके पास पैसा है उनको एक्सपीरियंस मिलता है. दिस हाउ द स्टॉक मार्केट वर्क. तो आई थिंक वी शुड बी लिटिल मोर सेंसिबल. किससे एडवाइस ले रहे हैं, क्या ले रहे हैं हम, कैसे ले रहे हैं. और द नेक्स्ट जनरेशन वी शुड, आई मीन. और एक और चीज है, जैसे मेरे ग्रैंड पेरेंट्स के वक्त, मेरे पेरेंट्स के वक्त तो ऑप्शन नहीं थे कि उनको स्टॉक मार्केट इतने समझ में नहीं आते थे, इतनी सारी फाइनेंशियल लिटरेसी नहीं थी तब. या तो गोल्ड में इन्वेस्टमेंट होता था, प्रॉपर्टी में होता था. किसी के पास ज्यादा पैसा है तो प्रॉपर्टी में, थोड़ा कम पैसा है तो गोल्ड में, या बहुत सेफ थे बैंक की एफडी वगैरह डाल दी. ठीक है. आज तो आप अगर सपोज आज आप इन्वेस्ट नहीं करेंगे इक्विटी में, वेल्थ नहीं बनाएंगे, तो 2 जनरेशन बाद आप अपने ग्रैंड किड्स को क्या बोलेंगे. तो वो तो बोलेंगे ना बेटा, दादाजी आपके जमाने में तो जीवित भी था, अनिल सिंह भी थे, बाकी सारे रसिक भाई भी थे, इतने सारे लोग थे, उन्होंने समझाया भी पैसा लगाओ. मान लिया आपके दादाजी के जमाने में कोई नहीं था तो समझ में आता. अब तो फाइनेंशियल लिटरेसी आ चुकी थी, आपने क्यों नहीं किया, तो हम जवाब क्या देंगे. वी आर आंसरेबल टू आवर नेक्स्ट जनरेशन, राइट. तो एटलीस्ट स्टार्ट इन्वेस्टिंग नाउ. सेंसिबल इन्वेस्टिंग, रेगुलर इन्वेस्टिंग, डिसिप्लिन वे, इट इज मस्ट. जी.
Good evening, sir. Sir, the next question is for anyone जो long term investor है, is when to book profits. आजकल you can say डर का माहौल जैसा है, markets are trending higher and higher, सिर्फ ऊपर जा रहा है. So lot of we also as a group and community discuss कि okay ऊपर ही जा रहा है, ऊपर जा रहा है. So when to book profits, how much portfolio to be booked in profits, पूरा ही खाली कर दे या 20% 50%, and say when to re-enter. बिकॉज ऊपर नीचे तो होते रहेगा, समझो सेम स्टॉक यू बुक प्रॉफिट, और फिर आपको लग रहा है कि यार मैंने गलती कर दी, देन हाउ टू री एंटर. मतलब क्या देख के री एंटर करे, या क्या प्राइस पे कितना कम होने पे री एंटर करे. सो अबाउट दैट.
ये करना क्यों है, मेरा फर्स्ट क्वेश्चन है. प्रॉफिट क्यों बुक करना है,
सर वही मतलब एवरीवन इज
और री एंटर क्यों करना है. मैं आपको बताऊं,
कीप ऑन करूंगा,
है ना. आप क्या चाहते हैं कि मार्केट ऊपर ही जाए, नॉट पॉसिबल. आप क्या चाहते हैं मैं ही टॉप पे बेचूं और वापस मैं ही री एंटर करूं. मैं ही सबसे ज्यादा समझदार हूं कि मैं लूंगा भी सबसे एकदम बॉटम प्राइस पे, मैं बेचूंगा भी सब. सी, टॉप है, मैं मानता हूँ मार्केट का टॉप है, क्योंकि लिए आप 26,000 का निफ्टी मार्केट का टॉप है. ये टॉप कौन सा है, ये पिछले 45 साल का टॉप है. इट्स नॉट द टॉप फॉर नेक्स्ट 45 years, नॉट इवन नेक्स्ट 5 years, नॉट इवन नेक्स्ट 3 years or 7 years, right? If we know that in next 3 or 5 years or 7 years or 10 years we are going to see multiple tops, then why should we bother about. See, profit booking का मैं आपको simple formula बता. It has nothing related to market. मार्केट के हिसाब से कभी किसी को प्रॉफिट बुकिंग नहीं करनी चाहिए. क्यों? क्योंकि जिसने फरवरी 2020 में 12,400 का निफ्टी था 12,400, और जिसने प्रॉफिट बुकिंग नहीं किया और 7,500 निफ्टी आ गया 40% नीचे, वहां से भी निफ्टी आज डबल से ज्यादा है विद इन 4 years, एंड योर पोर्टफोलियो वुड बी मच मच हायर एक्चुअली. तो पॉइंट सिंपल है, अगर आपने टॉप पे प्रॉफिट बुक नहीं किया, तभी प्रॉफिट बुक करने की फर्स्ट एंड फॉरमोस्ट कंडीशन इज यू इन्वेस्ट मनी because you need it at the right point in time, maybe for your higher education of kids, maybe wedding or a world tour, or maybe whatever you want to buy a house. अगर आपको पैसे की जरूरत है और उसके लिए आपको प्रॉफिट बुक करना है, आपको पैसा निकालना है, आप कोई लेवल मत देखिए, किसी को मत पूछिए, थोड़ा बहुत टाइम कर लीजिए, वो एक अलग बात है. डेफिनेटली डू इट, बिकॉज वो उसी के लिए आपने पैसा लगाया. नंबर 1. नंबर 2, आप मार्केट को मत देखिए कि मार्केट का टॉप कहाँ है, क्या है. अगर आपको प्रॉफिट बुक करना है तो आपके पास स्टॉक्स हैं, तो आप अपना इंडिविजुअल स्टॉक देख लीजिए कि क्या मेरा स्टॉक वाकई में ओवर वैल्यूड हो गया है, कि 80, 90, 100 के पी मल्टीपल पर ट्रेड है, विच इज नॉट जस्टिफाइड. देन बुक प्रॉफिट, अदरवाइज डोंट बुक प्रॉफिट. सिर्फ इसलिए कि स्टॉक बहुत बढ़ गया, भाई जब घटता है तब भी तो इतना ही घटता है, इतना जोर से घटता है, तब तो नहीं लगता कि मैं सारा का सारा पैसा घर बेच के पैसा डाल दूं. तो ये फीलिंग आप मार्केट को टाइम करने के हिसाब से मत कीजिए. रहा सवाल कि आपको लगता है कि हाँ, इट वॉज माई लक विच गेव मी सो मच ऑफ रिटर्न, नॉट माई स्किल्स. कभी कभार ऐसा फील होता है और होना भी चाहिए. That point in time, you may book your 20-25% of portfolio and sit idle. So your risk of, losing profit is reduced substantially. See, मैं आपको एक सिंपल सा सवाल पूछता हूँ. हिंदुस्तान के आजादी के हमारे 75-77 साल हो गए, 77 ईयर. तो वट एवर टाइम वी हैव स्पेंट पोस्ट इंडिपेंडेंस, मुझे बताओ जो 75 साल में हमने देखा, आगे के 25-50 साल में उससे बेहतर ही होने वाला है. करेक्ट. वी आर कॉन्फिडेंट अबाउट इट, राइट. व्हेन वी आर कॉन्फिडेंट अबाउट इट, तो मार्केट ठीक है, छोटा मोटा बीच में टॉप बनाएगा, करेगा. मैं आपको सिंपल सवाल ये पूछता हूँ कि अगर 5 साल में आपको लगता है कि मार्केट चलो टॉप बना के घट जाएगा, कितना? 26,000 से घट के कितना हो जाएगा निफ्टी? 20,000, इससे ज्यादा नहीं. कोई है हाउस में जो 20,000 से भी और नीचे का सोचता हो? जिसको 15,000 लगता हो निफ्टी, जरूर बेच दे. लेकिन 15,000 होगा क्या? अगर 20,000 हो गया या 22,000 हो गया, जो बजट के दिन का लो था 21,000 के आसपास का, वट एवर, दैट इज वर्स्ट केस सिनेरियो. तो व्हाट यू आर ट्राइंग टू कैच? 4,000 पॉइंट्स, राइट? How much? 4,000 points is hardly 10 to 20%. What is upside in next 5 years, 10 years? Can we see Nifty 35,000, 40,000, 50,000? Answer is yes. तो 5,000 पॉइंट के लिए इतनी मेहनत करने के लिए मैं अपने 25,000 पॉइंट को रिस्क पे क्यों डालूं? तो आई डोंट थिंक इट्स, यू शुड एवर थिंक ऑफ सेलिंग unless it is really required. One, from your financial perspective. Second, if the stock is really, really very expensive. या स्टॉक के फंडामेंटल या सेक्टर के फंडामेंटल चेंज हो रहे हैं, कुछ हो रहे हैं, तब तो अलग बात है. अदरवाइज यू शुड होल्ड ऑन टू योर इन्वेस्टमेंट्स, नो नीड टू सेल.
Sir, next question is from Dr. Tanmay. So he is our fundamental analysis expert, sir. So his question is, what is your view on new age companies where old school valuations may not work? मतलब सारे IPOs are the P's are very high, and you see companies adjusted EBITDA profitability without free cash flows. So do you think any valuation metrics there, or you prefer technicals?
डॉक्टर तन्मय खुद अच्छे से जानते हैं मार्केट, अच्छे से बढ़िया समझते हैं. सी, आई एम not bullish on these new age companies. I'm extremely bullish. Not only bullish, I'm very, very bullish. अभी 2 रिजल्ट आए पिछले 2-3 दिनों में. I'm sure everyone is comfortable with Hindi English mix. तो मैं ना रियल अनिल सिंह भी थोड़ा हिंदी में ज्यादा होता हूँ, नहीं तो थोड़ा आर्टिफिशियल अनिल सिंह हो जाऊंगा तो ऐसा है ना. ओके, सो रिलायंस रिटेल और डी मार्ट 2 नंबर्स आए. फर्स्ट टाइम एवर these guys are in retail business, they're facing problems, and they're facing problems with quick commerce. Okay, the quick commerce has changed the way we used to order our things actually. अब 10-10 मिनट में आपको जो चीज चाहिए जब चाहिए मिल जाती है, राइट. और इसने हमारी आदतें बिगाड़ दी, और एक बार बिगड़ी हुई आदत जल्दी से सुधरती नहीं है. अच्छी आदत को बिगाड़ना आसान है और बिगड़ी हुई आदत को सुधारना बहुत मुश्किल है. एक जमाना था, मेरे ग्रैंड पेरेंट्स 1-1 साल का राशन लेके भर कर, 1 साल के लिए गेहूं है, 1 साल के लिए दालें बन रही है, वो सारी प्लानिंग चलती थी पूरे साल की. आज कल के लिए क्या, अगर आपको राशन चाहिए तो शायद कितने आपके फैमिली में मिलेगा भी नहीं, मतलब कल की कल मंगा लेंगे, 10 मिनट में आता है. दैट कंफर्ट एंड दैट कॉन्फिडेंस. इसीलिए जब इन कंपनीज के आईपीओ आए, पेटीएम, आई वाज द ओनली पर्सन हु वाज आफ्टर पेटीएम्स लाइफ, आई सेड कि ये 50% नीचे में मिलेगा. जोमेटो whatnot, Nykaa, all those Star Health or PB वगैरह. But when we found this, these promoters have learned the lesson very hard way, and they understand primary private market and public market are two different animals. और यहाँ पे बस प्रॉफिट दिखाना पड़ता है. यहाँ बातों से काम नहीं चलता. मैं ये कर लूंगा, इतनी क्लिक हो जाएगी, इतने रजिस्टर, वो सब ठीक है. वो आप पी फंड को बेचो स्टोरी. इधर तो प्रॉफिट दिखाओ. एंड दीज गाय हैव लर्न दिस लेसन in a very, very perfect manner. And that is then from 50 rupees, we started recommending Zomato very aggressively. और मुझे जितना 50 रुपए में अच्छा लगता था, मुझे Zomato अभी भी 250-300 रुपए में भी उतना ही अच्छा लगता है. मुझे आई एम एक्सट्रीमली बुलिश ऑन ऑल दिस. इवन पेटीएम में बुलिश हूँ. इवन मुझे पीबी फिनटेक, स्टार हेल्थ, ऑल दिस ई कॉमर्स कंपनी, नायका, मामा अर्थ, इन सब में कोई कोई कंपनी होगी, किसी को कंपटीशन मार देगा, कुछ होगा, वो एक अलग चीज है. बट इन जनरल these companies are the future. Trust me, you will see many companies from this space into Nifty and Sensex or some other indices very soon. Because वहीं पर, अब now coming to valuations. Of course, valuations आप वही वाली बात है ना, जब नायका लिस्ट हुआ आईटीसी से ज्यादा वैल्यूएशन. अब आप कंपेयर करोगे आईटीसी इतना पैसा. See, end of day, there are two things. One is valuation, second is what you earn out of a stock. Right? तो हम तब हमें आईटीसी बहुत अच्छा लगता था. 200 रुपए में हम, तब किसी को आईटीसी नहीं लेना था, तो मैं चिल्ला चिल्ला के आईटीसी बोलता था. तब मुझे लगता था आज मेरे पास 500 रुपए में आईटीसी है, बट आई फील आईटीसी बढ़ेगा, लेकिन आईटीसी के कंपेरिजन में दूसरे स्टॉक्स ज्यादा आपको रिटर्न देंगे, बिकॉज उनकी बैलेंस शीट धीरे धीरे स्ट्रॉन्ग हो रही है. जो एक्विजिशन कर रहे हैं, जो स्पेस बना रहे हैं और स्ट्रेंथ बना रहे हैं, अब ये कंपनी इतनी स्ट्रॉन्ग होगी कि इनको आसानी से कोई मार नहीं सकता. So that is the reason. So you need to discount future valuation maybe 1 year or 2 year down the line if you really want to buy a new age company. आप आज की या पास की कमाई पे कभी ये स्टॉक खरीद नहीं पाएंगे. Never ever you will be able to buy. So that is slightly higher risk for much better returns. So it's what I would suggest, rather instead of putting a lot of money, you put a small money and test it. But I'm very bullish on new age companies. I'm very sure.
And I think सर इसमें एक और कंसेप्ट है कि विनर टेक्स इट ऑल है. तो वी कैन क्रिएट मे बी अ बकेट. आई थिंक आपके चैनल पे मैंने देखा भी था ये ओपिनियन. और बकेट क्रिएट करें न्यू एज कंपनीज का, एंड उसमें से देयर मे बी सम हु विल क्रैश आउट ऑफ इट, एंड देयर विल बी सम जो बहुत बड़ा एक वेल्थ क्रिएशन करके जाएंगे डेफिनेटली.
सर इसमें क्या है ना, दो चीजें. आपको क्या करना है, आपको वेल्थ बनानी है या अच्छे से ठीक ठाक से कमाई करनी. राइट, यू हैव टू बी वेरी क्लियर. सी आई गिव यू अ फॉर्मूला. सी, जितने लोगों ने, फॉरगेट इन इंडिया, अक्रॉस द वर्ल्ड, जो बड़ा पैसा बनाया, बड़ी वेल्थ बनाई, उन्होंने कुछ ही स्टॉक खरीदे. आई मीन कुछ ही स्टॉक में, सेलेक्टेड स्टॉक में बहुत बड़ा क्वांटिटी बहुत लंबे टाइम के लिए रखा है. सो दैट थ्री कंडीशन: सेलेक्टेड स्टॉक्स, बिग क्वांटिटी एंड लॉन्ग टर्म. दिस इज द फॉर्मूला टू क्रिएट वेल्थ फ्रॉम एनी स्टॉक. है ना. आप उसको 50% कमाने पे, 100% कमाने पे नहीं बेचते हैं उसको. कैन योर स्टॉक बी 10 times, 20 times, 50 times, 100 times? दिस इज द क्वेश्चन यू नीड टू आस्क. राइट. 125 रुपए में मारुति का आईपीओ आया था, आज 12,500 पे ट्रेड करता है. राइट, 1000 टाइम्स. करेक्ट. बीएससी आज आपका 5,000, 4,500 जो भी है. सो पॉइंट इज, डू यू हैव a potential stock which can give you 30, 40, 50 times return? Okay. If yes, then do you have that conviction and patience to hold him for 10, 15, 20 years? If yes, then can you really buy a sizable chunk? अब 100 शेयर, 50 शेयर लेके क्या वेल्थ बना लोगे आप? वो 50 गुना हो भी गया. So you need to ask that question whether I can hold it for. So diversification के अपने फायदे हैं. So if you are a fund manager and I'm a public expert, okay, so what I would say, to be on safer side, भाई एक साथ मत डालो, मर जाओगे यार. और नेचुरली अगर वही डालना, आपने वही स्टॉक नहीं चला, तो बैंड बच जाएगी और लोग आपको ट्रोल करेंगे. तो आप एक ऐसा करिए, ये 5 स्टॉक का पोर्टफोलियो बना लिए. बट रियली इफ यू मेड अ स्टॉक ऑफ 5 स्टॉक्स, एक पेटीएम है, एक आपका जोमेटो है, एक मामा अर्थ है, एक पीबी है, इन्फो एज है, पैसा बना क्या? वही एवरेज रिटर्न आएगा, 18-20%. करेक्ट. बट अगर आपको 5 गुना करना था 2 साल में, तो खाली जोमेटो लेना था. राइट. सो दिस इज, if you have understanding about a stock, patience money and sense that it may go right, it may go wrong, and I am ready to take that risk. फिर तो बॉस वेल्थ तो कॉन्सेंट्रेटेड बेट्स लेने से बनती है, बड़ा पैसा तो ऐसे ही बनेगा. एंड बीइंग अ डॉक्टर यू हैव अ सक्सेसफुल करियर, राइट? यू नीड नॉट वरी अबाउट योर ब्रेड एंड बटर. तो बॉस डॉक्टर्स को तो कॉन्सेंट्रेटेड बेट्स डालनी चाहिए, तभी आपका बड़ा वेल्थ बनेगा. एंड पुट मनी द बिजनेस विच यू अंडरस्टैंड. फॉर एग्जाम्पल यू आर डॉक्टर्स, यू नो, कोई एक आंख की दवा आईटोन काइंड ऑफ, आई एम नॉट एग्जैक्टली आईटोन, वो पता चला 100 रुपए में आती है, राइट? एंड यू नो it cannot cost more than 10 rupees. If you know that some Cipla or someone is making money out of like just water, you know this company could be multi-bagger, right? So you understand that business very well. Any kind of any company from your field, and you will be much more successful because you understand that business. जिस business में आपको understanding है ना, उसका stock नीचे ऊपर हो जाए आपको फर्क नहीं पड़ता. Say suppose you don't know anything ABCD about any engineering company, और वो ऊपर नीचे हो गया तो आपको समझ में नहीं आएगा करूं क्या. और अगर ये कोई फार्मा स्टॉक आपका ऊपर नीचे हो गया तो आपको बस मुझे पता है यार इसकी तो दवा बिकने वाली है, इसका तो मैनेजमेंट ये है. सो इन्वेस्ट इनटू दोस बिजनेसेस वेयर यू हैव लिटिल स्ट्रॉन्ग होल्ड, वेयर यू अंडरस्टैंड द बिजनेस.
So the next question was कि considering FIAs sir रोज ही बेच रहे, रोज ही बेच रहे, रोज ही बेच रहे. So normally they were considered as smart money. In the sense we've always heard कि wherever FIs are doing, you can copy them if you can copy them. तो सर अभी क्या करना चाहिए? In the sense FIs, so every day we see markets, every day they are selling stocks for 3,000, 2,000, 3,000 crores every day, and this is happening over last 1.5 years. So sir, how do we deal with this? In the sense, once we personally being in this country, we know we are bullish, we'll probably do well over next 10, 15 years. But on the other hand, the foreign investors who initially used to drive the market up are leaving, consider and going away. तो sir थोड़ा सा conflict develop हो जाता है. तो how do we deal with that?
16 मई 2023 साल, सवा साल पहले ये सवाल आया था जब मैं शो खत्म कर रहा था. आशु मदान ने ऐसे ही सवाल मुझे पूछा कि FIs बेच रहे. उस दिन पता नहीं अचानक से मेरे अंदर क्या कुछ हो गया ऐसा, तो मैंने बोला कि बेचने दो जितना बेचना है. हिंदुस्तान में पहली बार तो रिटेल ने ताकत दिखाई है, पहली बार तो हमारे में ये पावर आया कि हम भी कुछ है. अब तक क्या है यार, हम लोग बेचारे ही थे. हिंदुस्तान के बाहर जाए तो कोई इज्जत नहीं, ये लोग आगे देखो स्नेक चार्मर्स का, बेगर्स का देश है, कुछ नहीं इनके पास, कुछ नहीं है, इज्जत नहीं मिलती थी. वी ऑलवेज ट्रीटेड सेकंड सिटीजन काइंड ऑफ, सेकंड भी कर ले तो बड़ी बात है, थर्ड फोर्थ काइंड ऑफ, यू नो. पहली बार तो हिंदुस्तान की पूरी दुनिया में इज्जत बनी है. पहली बार हमने अपने पैसे पे तय. सी दिस bull market is different in many ways. First time ever, पहली बार इतिहास में हमने रिटेल मनी और अपने पैसे के दम पे लाइफ हाई बनाया, FIs के पैसे के दम पे नहीं. पहली बार हमारे मार्केट लाइफ हाई पर पहले पहुंचे, अमेरिका के पीछे पीछे हम नहीं है. पहली बार हम हमारी इकोनॉमी की स्ट्रेंथ पर लाइफ हाई पर पहुंचे, लेकिन ग्लोबल मार्केट और ग्लोबल इकोनॉमिक्स की वजह से. पहली बार हमारे मार्केट हमारी कंपनियों की अर्निंग्स और कंपनियों की ताकत और उनकी बैलेंस शीट की स्ट्रेंथ के दम पर हाई बना रहे हैं, न कि ऐसे ही. पहली बार इतिहास में ऐसा हो रहा है कि हमारे मार्केट हाई किसी भी केतन और हर्षित के बगैर, किसी ऑपरेटर के बगैर फंडामेंटल्स पे बना रहे हैं, न कि किसी कोई 2-4 लोग मिलके, 2-4 ग्रुप मिलके शेयर चला रहे हैं. ये मार्केट बिल्कुल अलग है, ये बुल रन बहुत अलग है, इंडिया के टाइम वाला बुल रन है. इसलिए FIs आए बेचे क्या फर्क पड़ता है, अब तक भी तो बेच रहे थे ना. पिछले 3 साल में जो बेचा है उसके बावजूद आप लाइफ हाई पे है, तो डरना क्यों है. इसलिए मैं बार बार बोलता हूँ, जो मेरा शो देखते जानते हैं, कहाँ जाएंगे यहीं आएंगे. अगर हम अच्छा करेंगे, हमारी कंपनी अच्छा करेगी, हमारे इकोनॉमी अच्छा करेगी, तो FIs भी यहीं आएंगे. तो FIs के खरीदने बेचने से मुझे डर नहीं है. मुझे डर कब है, जब हमारी कंपनी की अर्निंग्स कम हो जाए. मुझे डर कब है, जब हमारी इकोनॉमी की ग्रोथ कम हो जाए. वो डरने वाली बात है. ये तो कोई फर्क नहीं पड़ता है, बेचना है बेच दे, जितना बेचना बेचे. और मैं तो बोल रहा हूँ बेचने के बाद भी हाल देख लीजिए आप क्या है. तो हमारा हमारा पैसा अगर मार्केट में है, हमारी लिक्विडिटी है, एक टाइम ऐसा आएगा, आप नोट करके रख लीजिए. एक टाइम आएगा, आप और मैं अपनी लाइफ टाइम में देखेंगे, और वो टाइम ये होगा जब हमारे लोकल इन्वेस्टर्स का इतना पैसा मार्केट में होगा, उनको हिंदुस्तान में पैसा लगाने के ऑप्शंस कम होंगे, और वो बाहर जाके दूसरे देशों में पैसा लगाएंगे. और तब वहां के देश वाले बोलेंगे भैया आज हमारे बाजार में तेजी होने वाली इंडिया की एफआई आई है हमारे यहाँ पैसा लगाने के लिए, या आप और हम अपनी लाइफ टाइम में देखेंगे, याद रखिएगा।
Thank you, sir.
Thank you, sir. Sir, we'll take a question from the chat box. Gopal Parekh sir पूछ रहे हैं how to invest sector wise and incoming sectors, which ones and how to deal with sectorial companies.
So first you want to understand which are the sectors who would perform well. Okay, तो सेक्टर चूज करने में भी ना कुछ अलग अलग तरह की टेक्निक्स हैं। द फर्स्ट टेक्निक इज यू वांट टू प्ले सेफ, ठीक है, और जिनको सेफ रहना है उनके लिए 3 सेक्टर हैं जिनका एक पोर्टफोलियो बना लीजिए। आईटी, फार्मा, एफएमसीजी, वी कॉल देम डिफेंसिव सेक्टर्स। इनमें पैसा गंवाने के चांस बहुत कम है, टाइम कम या ज्यादा लगेगा, लेकिन इन सेक्टर, तीनों सेक्टर में जब भी आप पैसा डालेंगे आपका पैसा कभी टूटेगा नहीं। टेम्पररी ब्लिप्स हो सकती है, ऊपर नीचे हो सकता है, बट ये 3 सेक्टर आपको ऑन एन एवरेज 15% का रिटर्न, 18% का रिटर्न कंपाउंडेड बेसिस पे आपको 15% मान के चलिए, जो अगले 5-10 साल में आराम से बना के देंगे। एफएमसीजी इंडिया की बहुत स्ट्रॉन्ग स्टोरी है। अब इसमें आपको लीवर से लेके, मेरिको से लेके, डाबर से लेके, या कोई गोपाल स्नैक्स टाइप की, प्रताप स्नैक्स टाइप की कंपनी, जो आपको पसंद आए उसमें आप पैसा डाल सकते। आईटी इंडिया की बहुत स्ट्रॉन्ग स्टोरी है। एक्चुअली देखा जाए तो इज्जत ही हमें आईटी कंपनी नहीं दिलवाई पूरी दुनिया में सबसे पहले। मुझे लगता है कि अभी भी आईटी कंपनी में जो पहले थोड़ा बहुत पिछले साल इसी वक्त डर था कि आर्टिफिशियल इंटेलिजेंस से क्या होगा क्या नहीं होगा, वो डर लोगों का निकल गया। वो और अब धीरे धीरे जैसे यूएस की इकोनॉमी अब स्ट्रॉन्ग हो रही है, जो रेट कट्स हो रहे हैं, और अगर वहां स्पेंडिंग बढ़ती है जो कि बढ़नी चाहिए, तो आईटी कंपनी अच्छा करेगी, तो आईटी पर मैं बुलिश हूँ। फार्मा सदाबहार सेक्टर है, आप लोग जानते हैं, इंडिया में भी, इंडिया के बाहर भी। जो डिमांड यूएस में इस वक्त फार्मा मेडिसिन वगैरह की है, अमेजिंग, मतलब, और जो प्राइसिंग पावर है अमेरिका बेस्ड जो, और लोकल भी, तो आई थिंक फार्मा कंपनी में बहुत एक्सट्रीमली बुलिश हूँ फार्मा पर। वो आपके लिए तीनों सेफ सेक्टर है, तो जिनमें आपको कहीं दिमाग नहीं लगाना, रिस्क फ्री चाहिए इन्वेस्टमेंट, ये हो गया। अब आइए एक सेक्टर जो बहुत इंटरेस्टिंग है और जो कमाई करके दे रहा है, आगे भी देगा, इसको मैं बोलता हूँ मार्केट इंफ्रास्ट्रक्चर स्टॉक्स। एक्सक्यूज मी, मार्केट इंफ्रास्ट्रक्चर स्टॉक्स ये क्या है? अगर हमें लगता है कि निफ्टी यहां से 50,000 होना है, या सेंसेक्स 2 लाख होना है, वोटेवर 1.5 लाख होना है, तो जो भी स्टॉक्स मार्केट के साथ जुड़े हैं उनमें बड़ा पैसा बनेगा। फॉर एग्जाम्पल एक्सचेंजेस, बीएसई, एमसीएक्स, राइट, इनके वॉल्यूम्स बढ़ेंगे। दूसरा, डिपॉजिटरीज जस्ट लाइक सीडीएसएल, रजिस्ट्रार एंड ट्रांसफर एजेंट्स, कोई कैम्स के फिनटेक काइंड ऑफ स्टॉक, ब्रोकर्स, एंजल वन, मोतीलाल ओसवाल काइंड ऑफ स्टॉक, वेल्थ मैनेजमेंट फर्म्स, आनंद राठी वेल्थ, नुआमा वेल्थ, 361 वेल्थ, ये स्टॉक्स हैं। इन स्टॉक्स में जो एक्शन है, म्यूचुअल फंड्स, कोई आपका एचडीएफसी म्यूचुअल फंड, आदित्य बिरला, निप्पॉन और यूटीआई, जो भी आपको पसंद है, ये सारे आपको बढ़िया कमाई करके देने वाले हैं। तो मार्केट से जुड़े हुए जो भी स्टॉक्स हैं, अब म्यूचुअल फंड में हर महीने इतने पैसे आ रहे हैं, आपको 25,000 करोड़ की एसआईपी आने लगी है, करेक्ट, तो अल्टीमेटली ये तो कमाएंगे, आप और मैं कमाए ना कमाए, ब्रोकर कमाएगा, एक्सचेंज कमाएगा, म्यूचुअल फंड कमाएगा। तो जिसके कमाई पे हमारे और आपके कमाने से फर्क पड़े ना पड़े, उसकी कमाई पक्की है, एटलीस्ट वहां तो इन्वेस्ट करो। सो देन यू आर पार्टिसिपेटिंग इन दिस बुल रन, राइट। तो ये एक स्पेस है जो मुझे बहुत मजबूत दिखती है। एक और स्पेस जो मुझे बहुत बढ़िया दिखती है वो है पीएसयू स्टॉक्स की। पहले लोगों को लगता था ये पीएसयू नहीं, पशु है, ये कभी चलते नहीं है। अब ये पशु 4 पैर से दौड़ रहा है, 2 पैर वालों से ज्यादा तेजी से दौड़ रहे हैं। और आपने देखा कि किस तरह से, देखिए, जो अल्टीमेटली कोई स्टॉक कब चलता है, जब उसका प्रमोटर स्ट्रांग हो, राइट। अगर प्रमोटर ढीला होगा तो वो कंपनी कभी परफॉर्म नहीं कर सकती। हिंदुस्तान ने पिछले 10 साल में क्या बदला है? पीएसयू स्टॉक्स का प्रमोटर। और पीएसयू स्टॉक का प्रमोटर कौन है? गवर्नमेंट ऑफ इंडिया। जो लीडरशिप चेंज हुए है सेंट्रल लेवल पे, उसका इंपैक्ट आप देखिए पीएसयू स्टॉक्स में जो आ रहा है ना। जो इनको काम करने की आजादी मिली है, जो एक्सपेंशन का, आप देखिए डिफेंस क्या आप आगे, आई एम टेलिंग यू, डिफेंस स्टॉक्स बहुत सारे ऐसे हैं जो टॉप से 40-50% गिर चुके हैं। जिन लोगों को लगता है कि जिन्होंने ओबिचुरी लिख दी डिफेंस स्टॉक्स की खत्म हो गई है सब कुछ, वो बेवकूफ है। ये एकदम राइट टाइम है डिफेंस स्टॉक में पैसा डालने का। ये तो वो स्टॉक है जिनके पास अगले 7-8-10 साल का रेवेन्यू विजिबिलिटी है। प्रॉफिट तो कम ज्यादा हो सकता है, मार्जिन कम ज्यादा हो सकते हैं, बट अल्टीमेटली कोई कंपनी रेवेन्यू करेगी तब तो प्रॉफिट कमाएगी। तो आई थिंक दिस इज राइट टाइम। आप एचडीएफसी म्यूचुअल फंड का डिफेंस फंड है, मोतीलाल ओसवाल का डिफेंस फंड है, आप वहां पे एसआईपी कर लीजिए, शॉर्ट क्लास एसआईपी कर लीजिए, 5-5% के फोन पे में 4 इंस्टॉलमेंट में पैसा डाल दूंगा, इनमें डाल के छोड़ दिए। रेलवे स्टॉक्स मुझे बहुत अट्रैक्टिव, आई डोंट नो आप में से कितने लोग रेलवे ट्रेवल करते होंगे, पिछले 5 साल 10 साल पहले रेलवे ट्रेवल कर अब करके, मैं तो अभी रिसेंटली सूरत गया था। वो रेलवे स्टेशन, ट्रेन, द वे थिंग्स हैव चेंज, और जो जिस तरह से बड़ा खर्चा आ रहा है, जहां सरकार खर्चा कर रही है, क्या वो सेक्टर तो चल नहीं है। हम पहले इंफ्रास्ट्रक्चर स्टॉक्स में क्यों पैसा डालते थे कि सरकार का इंफ्रा पे फोकस है, एविएशन, रेलवे, इन सारे स्टॉक्स, डिफेंस, इस पे जो गवर्नमेंट का फोकस है, मुझे पीएसयू स्टॉक्स अब भी बहुत अच्छा लगता है। अब आइए आप 25,000 की निफ्टी पे, 26,000 की निफ्टी पे, वैल्यूएशन बहुत महंगे है, तो आपको 8 से 10 के पी मल्टीपल ऑयल एंड गैस पीएसयू आज भी मिलते हैं, कोई गैस स्टॉक सबको अभी भी, आपको एमजीएल है, हर एक मुंबई के हर एक बिल्डिंग में अभी गैस आने में कितना टाइम लगेगा। जिन कंपनियों के पास काम है, पहली चीज तो उनके पास काम और रेवेन्यू विजिबिलिटी होनी चाहिए, तो आई एम श्योर दैट दीज आर द स्टॉक्स अभी भी आपके पोर्टफोलियो में होने चाहिए। पीएसयू स्टॉक्स मुझे बहुत पसंद है। इसके अलावा अगर आपको थोड़ी सी एक एग्रेसिव बेट लेनी है, तो मेटल और केमिकल, डिपेंडिंग कि चाइना का रिवाइवल होता है। अगर चाइना का रिवाइवल होता है तो ये दो सेक्टर्स रहते हैं जो बहुत अच्छा परफॉर्म करेंगे, यहाँ आप पैसा लगा सकते हैं। इसके अलावा भी मेरे पास इतने आइडियाज, आपके पास पैसे कम पड़ जाएंगे बहुत सारे, मतलब सी आई टेल यू वन थिंग वेरी क्लियरली, लाइफ टाइम हाई के आसपास मार्केट है, उसके बावजूद इस मार्केट में आपको पैसा गंवाने के लिए, ऐसे स्टॉक ढूंढने के लिए बहुत मेहनत करनी पड़ेगी, आसानी से नहीं मिलेंगे। पैसा तोड़ने के लिए, पैसा कमाने के लिए आसानी से मिल जाएंगे, थोड़ी सी मेहनत में भी आपको अच्छे स्टॉक ढूंढना आसान काम है, खराब स्टॉक ढूंढना मुश्किल है। सिर्फ कचरा नहीं लेना है, थोड़ा सा पेनी स्टॉक छोड़ दीजिए कि ये स्टॉक 2 का 10 हो जाएगा, 10 का 100 हो जाएगा, वो छोड़ दीजिए। अदरवाइज देयर आर एम्पल अपॉर्चुनिटीज अवेलेबल इन दिस मार्केट टू मेक मनी एंड इन्वेस्ट इनटू गुड स्टॉक्स टिल आई।
Next question.
Sir, next question is not related to stocks per se, but this is a question which has come up very frequently. This is with respect to investing in real estate. One is considering the Indian sentiment and our societal sentiment for owning a home. One is whether to buy or rent, and especially because we have doctors or other people come from smaller cities, considering tier 2, tier 3 cities versus buying in metro cities. And second thing is they wanted further guidance on, after a home loan, about the prepayment, down payment, and other such points to consider.
तो मैं अगर कोई एक आध इसमें से क्वेश्चन भूल जाऊं तो यू प्लीज रिमाइंड मी। पहली चीज तो ये कि whether you should invest into real estate stocks or not, real estate or not, और उसमें आपका घर किराए का होना चाहिए, खुद का होना चाहिए। इसमें मेरी ओपिनियन मैटर नहीं करती, इसमें एक ही ओपिनियन मैटर करती है, वो है आपकी वाइफ की, आपकी बेटर हाफ की, आपकी स्पाउस की। इफ ही और शी इज रेडी टू लिव इन रेंटल हाउस, कोई प्रॉब्लम नहीं है, आपको घर खरीदना ही नहीं चाहिए, घर किराए पे लेना चाहिए। लेकिन वो एक इमोशनल अटैचमेंट होता है, सोशल सिक्योरिटी वाली जो फीलिंग होती है, तो और आप तो सब डॉक्टर लोग हैं, अच्छा कमाते हैं, मैं एज्यूम करता हूँ, तो एक घर आप ले लीजिए, एक घर तो आपका होना चाहिए जहां आपको रहना है। उसके अलावा जब जब आपका इन्वेस्टमेंट करने का मन करे रियल एस्टेट में, आप उसके बजाय रियल एस्टेट स्टॉक्स खरीद लीजिए। एक सबसे बड़ा आराम क्या है, आज लिया, अभी लिया, जब लेना है ले लीजिए, जब बेचना बेच दीजिए। रियल एस्टेट खरीदने में आपकी जो प्रोसेस टाइम, एनर्जी, वो जो जाएगी, 3 महीने तक देखते रहो, ये देखो वो देखो, इसमें ये डॉक्यूमेंटेशन, कॉस्ट ऑफ बाइंग, इतनी ड्यूटी, ये वो, मतलब रियल एस्टेट खरीदने को और बेचने को इतना मुश्किल कर रखा है। उतना मुश्किल काम क्यों करना है लाइफ में, आपके पास कहाँ टाइम है इतना, यूर प्रोफेशनल्स। सिंपल है बॉस, आप जाके स्टॉक खरीदो, स्टॉक इमीडिएटली एक क्लिक पे आपको डीएलएफ मिलता है, गोदरेज प्रॉपर्टी मिलती है, ओबेरॉय रियल्टी मिलती है, जो खरीदना है आप खरीदिए, और एक क्लिक पे बिकता है। एंट्री एंड एग्जिट। नंबर 2, आपके लिए वन सेकंड, माय बैटरी इज गेटिंग लो, लेट मी जस्ट कनेक्ट टू वन थिंग, या इट्स ओके नाउ, ओके। सो इजी है आपके लिए, फर्स्ट क्लास जब खरीदना है बेचने में। एक ही चीज है जो मैं अभी सूरत भी गया था, वहां पे भी काफी डॉक्टर्स की एक मीटिंग थी, सारे डॉक्टर, नो डाउट अगर रियल एस्टेट में इन्वेस्ट करने के लिए पहले जो एक मोटिव होता था वो ये होता था कि भाई 80-20 स्कीम चलती है, 20% चेक 80% कैश। आजकल मुझे नहीं पता कितनी है, आजकल 80-20 रिवर्स हो गई, 80% चेक 20% कैश भी कोई ले ले तो बड़ी बात है, रेपुटेड बिल्डर तो वो भी नहीं लेते हैं। तो अगर वो एडजस्टमेंट वाली चीज है और वो कहीं एडजस्टमेंट किसी को करना कराना है, वो तो एक अलग चीज है। तब तो आप मुंबई में या मेट्रो सिटीज में लें या छोटी शहरों में जाके एग्रीकल्चर लैंड लें जहाँ पे आपको कैश ज्यादा चले जाता है और चेक कम देना पड़ता है, वो एक अलग चीज है। दैट इज नॉट योर इन्वेस्टमेंट, दैट इज योर टैक्स प्लानिंग, दैट इज टैक्स प्लानिंग। सो टैक्स प्लानिंग शुड बी कंसिडर कंप्लीटली डिफरेंट फ्रॉम इन्वेस्टमेंट प्लानिंग। लोग जनरली गलती ये करते हैं कि टैक्स प्लानिंग को इन्वेस्टमेंट प्लानिंग समझ लेते हैं, वो एकदम अलग है, वहां आपको टैक्स बचाना है, वो एक अलग चीज है। बट अदरवाइज आई एम वेरी वेरी क्लियर दैट इंस्टेड ऑफ इन्वेस्टिंग इनटू रियल स्टेट, एक आपका घर हो जाए सफिशियंट है। आपको पक्का पक्का आपको इन्वेस्टमेंट मार्केट में करना चाहिए। रसिक भाई को पूछिए, ही वांटेड टू बाय अनदर हाउस एंड आई स्टॉप्ड हिम एट वेरी राइट पॉइंट इन टाइम। मुझे नहीं पता कितना 8-10 साल पहले, 7-8 साल पहले की बात है, और आप देख लीजिए उनको। सर जरा बताइए।
हाँ, जुलाई 2014।
राइट,
Yeah.
एंड इफ यू हैव बॉट दिस हाउस यू वुड हैव रिग्रेटेड। आज आपका पोर्टफोलियो मार्केट में क्या हुआ है, वहां पे क्या रिटर्न आता है, सोच लीजिए।
वो बिल्डिंग सर अभी तक ग्राउंड से ऊपर नहीं आया, अभी भी नीचे ही है। मैं आपको मजाक करता हूँ।
नो तो पॉइंट ये, एक चीज आपको, एक चीज और बताऊं, ये तो अभी थोड़े थोड़े है ना 6-8 महीने में जो है ना शॉर्ट टर्म पैसा बनाने के चक्कर में ये सोशल मीडिया में बहुत लोग मार्केट के नाम पे फंसा लेते हैं। अदरवाइज मुझे बताइए, हिंदुस्तान में आप कोर्ट में जाइए, सबसे ज्यादा मालूम है 70% केसेस जो कोर्ट में पेंडिंग पड़े हैं वो रियल एस्टेट की लड़ाई झगड़ों की वजह से है। उनमें मेन एसी एसेट क्लास में क्यों पैसा डालना है जहां झगड़े ही होने हैं, मर्डर हो जाते हैं, भाइयों में झगड़े हो जाते हैं, दोस्तों में हो जाते हैं, एक दूसरे में हो जाते हैं, दो पार्टीज में, और वो पड़ी है बिल्डिंग 25-50 साल से कुछ नहीं होता उसका। सो आई थिंक गो फॉर अ सेफर एंड लिक्विड इन्वेस्टमेंट, और रियल एस्टेट में ही करना है तो स्टॉक्स खरीद लीजिए। आपको कोई डीएलएफ कमा के दे देगा, गोदरेज प्रॉपर्टी कमा के दे देगी, ओबेरॉय कमा के देगा, वहां पे लगाइए बस।
Any other questions from the audience?
कुछ चैट बॉक्स में मैंने देखे तो थे।
Should we read the balance sheet or the conference call regularly? What to see in the report for retail investor, especially if it's a non-expert?
देखिए, ऑनेस्टली डिटेल इन्वेस्टर्स को, जो नॉन एक्सपर्ट है, उनको बहुत डिटेल में बैलेंस शीट और कॉन कॉल पढ़ने और समझने की जरूरत भी नहीं है। उनके लिए मैं आपको शॉर्टकट बताता हूँ, आपको वो नहीं पढ़ना है क्योंकि वो पढ़ के पे आपको बहुत समझ में नहीं आएगा। आपको क्या करना है, रिजल्ट के बाद जो भी रिसर्च रिपोर्ट आ रही है, कोई ब्रोकरेजेस से आ रही है, कोई एफआई से आ रही है, जहां भी आ रही है, आजकल तो ब्रोकरेज रिपोर्ट सब जगह अवेलेबल है। आप 4 ब्रोकरेज रिपोर्ट पढ़ लीजिए, 2 ब्रोकरेज रिपोर्ट पढ़ लीजिए, आपको समझ में आ जाएगा कि मेरा स्टॉक या मेरी कंपनी किस डायरेक्शन में जा रही है। क्योंकि क्या है, अल्टीमेटली रिजल्ट का, बैलेंस शीट का, प्रॉफिट एंड लॉस का और उसकी कॉन कॉल का जो पूरा एसेंस है वो रिसर्च रिपोर्ट में निकल के आता है। और उसके लिए आप इन फंड्स के पास में, एफआईज के पास में, म्यूचुअल फंड के पास में बेस्ट ऑफ द रिसर्च एक्सपर्ट्स हैं। तो रिटेल को मुझे नहीं लगता, तो हाँ, आप एकेडमिक पर्पज से आप सीखना समझना चाहते हैं, दैट इज डिफरेंट थिंग, बट फॉर योर इन्वेस्टमेंट पर्पज यू नीड नॉट स्पेंड दैट मच टाइम। इतना टाइम तो आप अपने प्रोफेशन में लगाइए ना। आप अपने प्रोफेशन की 4 रिपोर्ट पढ़िए कि क्या क्या नई टेक्नोलॉजी आई है, मेरे पेशेंट को मैं ज्यादा किस तरह से ठीक करूं, वहां पे आपको ज्यादा फायदा होगा। तो ये काम जिसका है उसको करने दीजिए। आप रिपोर्ट भी पढ़ेंगे खाली, हमें जैसे रिपोर्ट पढ़ के कितना समझ में आता है कि भाई मेरी ये रेंज है, इस रेंज से बाहर किधर बॉल्ड लेटर्स में आ गया तो मुझे टेंशन है, अच्छा बॉल्ड लेटर में आया मतलब ये वाली चीज पे ध्यान देना है। फिर मैं सर से पूछ लूंगा, सर क्या करना है। ये उतना, जितना हम आपके प्रोफेशन के बारे में समझते हो उतना आप हमारे प्रोफेशन के बारे में समझ लीजिए, उससे काम हो जाएगा बस। उससे ज्यादा टाइम देने की जरूरत ही नहीं, क्योंकि क्या होगा, नहीं तो फिर आप है ना, प्रॉब्लम क्या है, प्रॉब्लम सीखने और समझने में नहीं है, प्रॉब्लम डिसीजन लेने में। अगर आपने कॉन कॉल में कोई ऐसी चीज जो छोटी है उसको बड़ा समझ लिया, या बड़ी है उसको छोटा समझ लिया, और उस पर आपने अपना इन्वेस्टमेंट डिसीजन ले लिया, तो उल्टा हो जाएगा। तो इसलिए बेहतर है आप रिसर्च रिपोर्ट्स पढ़िए, वो ज्यादा ठीक रहेगा।
Only last one question before we wind up. Very quickly.
Sir, that he answered, no? 100 minus the age.
No. This is gold and dollar.
So sir, there's one question. Say, you have an X amount of portfolio So how should we allocate in buying dollar, gold, equity, debt? Basically, non to play safe. In the sense, if you want a safe or a low risk portfolio.
मैं एक कल शो करने वाला हूँ 11 बजे, ठीक है, म्यूचुअल फंड की मास्टर क्लास। वो मेरा पहला शो है, मैं मंथली शो कर रहा हूँ म्यूचुअल फंड पे, जो मैं कल से स्टार्ट कर रहा हूँ। उसके लिए ये परफेक्ट सवाल है एक्चुअली। इसका जवाब वहां पे भी है, लेकिन मैं आपको पहले लीक कर देता हूँ। जवाब ये है कि आप न इक्विटी खरीदिए, न गोल्ड खरीदिए, न फिक्स इनकम, कुछ मत खरीदिए। आपको जो है, आपको मैं एक फंड बताता हूँ, उस फंड में पैसा लगाइए। उस फंड की कैटेगरी का नाम है मल्टी एसेट एलोकेशन फंड। मल्टी मतलब कई सारे, एसेट मतलब अलग अलग तरह की एसेट्स, एलोकेशन मतलब आपको थोड़ा थोड़ा पैसा उसमें एलोकेट करना। ये फंड क्या है? इस फंड में दो तरह के फंड होते हैं। एक फंड वो है जो 65% से ज्यादा पैसा इक्विटी में डालते हैं, ठीक है, और ये इक्विटी फंड की तरह ट्रीट किए जाते हैं। कुछ फंड ऐसे हैं जो 65% से कम इक्विटी में डालते हैं, तो वो नॉर्मल फंड होते हैं, वो इक्विटी फंड नहीं माना जाता। आपको वो फंड जो इक्विटी वाले हैं, उन फंड में आपको पैसा लगाना है, सिंपल। इक्विटी फंड में पैसा लगाना क्यों? क्योंकि आपका जो टैक्सेशन होगा, वो टैक्सेशन इक्विटी की तरह होगा। 1 साल से ज्यादा रखा 12.5% लॉन्ग टर्म, 1 साल से पहले निकाला तो 20% शॉर्ट टर्म। अब इसमें क्या होता है? इसमें मिनिमम इन्वेस्टमेंट आपका 65% होगा, वो इक्विटी में होगा। मिनिमम इन्वेस्ट दो और एसेट क्लास में होगा, वो 10% होगा, से सपोज गोल्ड और फिक्स इनकम। इसके अलावा रीट्स और इन्वेस्ट में भी ये पैसा डाल सकते हैं, लेकिन जनरली मल्टी एसेट एलोकेशन फंड 3 जगह पैसा डालते हैं: इक्विटी, फिक्स इनकम यानी डेट, और गोल्ड। गोल्ड में सबको तेजी लगती है, बढ़िया है, आपका गोल्ड में एक्सपोजर हो गया, और टैक्सेशन आपका इक्विटी का लग रहा है। नहीं तो आप डॉक्टर हैं, आपको सरचार्ज वगैरह के साथ 40% का टैक्स पड़ेगा, हाईएस्ट स्लैब में, 5 करोड़ वाला। फिक्स इनकम में आपको 2 साल के बाद आपका लॉन्ग टर्म होता है, फायदा नहीं है, और टैक्स आपका हाई है। और शॉर्ट टर्म में करेंगे तो फुल आपका जो स्लैब है उससे टैक्स लग जाएगा। सो बेटर ये है कि आप मल्टी एसेट एलोकेशन फंड में पैसा डालिए, और उसमें ऑटोमेटिकली आपका एसेट, अच्छा, इंटरेस्ट रेट्स आर गोइंग टू फॉल इन इंडिया ऑल्सो इन नियर फ्यूचर। और वो दिसंबर से होता है या फरवरी से होता है, वो देखने वाली बात है, बट अल्टीमेटली घटनी है, रेट्स घटनी। तो इस वक्त द बेस्ट इन्वेस्टमेंट इफ यू वांट टू सेलेक्ट अ फंड एंड इन्वेस्ट इज मल्टी एसेट एलोकेशन फंड। उसमें पैसा डाल दीजिए। उसमें शायद मेरे ख्याल से आईसीआईसीआई प्रू का सबसे बड़ा फंड है, मैं कल बताऊंगा नाम, मुझे अभी याद नहीं आ रहा। 2 फंड है, उनमें किसी में भी आप फंड में डाल दीजिए पैसा, वो सबसे बढ़िया तरीका है। उसमें आपको टैक्सेशन का बेनिफिट है, और आपको एसेट्स में आपको पूरा डाइवर्सिफिकेशन मिल रहा है। अलग अलग फंड सेलेक्ट करने की जरूरत नहीं। तो क्या कभी आप क्या करोगे, आपने कुछ फिक्स इनकम में डाल दिया, कुछ गोल्ड फंड में डाल दिया, और कुछ, तो उसमें प्रॉब्लम क्या होगी कि आपको फिर है ना, टैक्सेशन अलग हो जाएगा। जिन लोगों को रिस्क नहीं लेनी है इस वक्त मार्केट में, और जो लोग इक्विटी में पैसा नहीं डालना चाहते, उनके लिए भी एक बहुत बड़ी आइडिया है मेरे पास में। इस वक्त आपको है ना लॉन्ग ड्यूरेशन डेट फंड में पैसा डालना चाहिए, जिनकी ड्यूरेशन 10 साल, 15 साल, 20 साल, 30 साल की। जितनी ज्यादा ड्यूरेशन वाले फंड में आप पैसा डालेंगे, इट डजेंट मीन कि आपको 30 साल होल्ड करना है। इसका मतलब ये कि उस फंड में 30 साल की या 20 साल की मेच्योरिटी वाले पेपर है, गवर्नमेंट सिक्योरिटीज वगैरह, बॉन्ड्स है, या कॉर्पोरेट बॉन्ड फंड में पैसा डालिए। तो ये फॉलिंग रेट में आपको डेट फंड में भी बहुत अच्छा रिटर्न, डबल डिजिट रिटर्न आ सकता है, कोई बड़ी बात नहीं 2 साल में। तो मतलब एनुअली आपको 9-10% का रिटर्न आराम से मिल जाए, कोई बड़ी बात नहीं। तो आई थिंक डेट फंड भी बहुत अट्रैक्टिव है इस वक्त आपको इन्वेस्टमेंट करने के लिए आज।
Thank you, sir. Thank you so much.
Thank you Anil ji as well as all the speakers. आज का सेशन काफी अच्छा था। पहले भी काफी अच्छे से डिस्कशन हुआ, एंड एट द एंड क्वेश्चन आंसर लाइक एनी टाइम विद अनिल सिंघवी जी इज ऑलवेज गुड। अनिल जी, आपका शो यहाँ पे बैठे हुए काफी लोग देखते हैं, काफी लोग दे आर योर, क्या बोलते हैं कि सर ने बोला तो ले लिया ऐसे। राजेश गुप्ता हमारे यहाँ पे, वैभव जी है एनेस्थेटिस्ट, he just buys whatever you say, that is it, he doesn't think, he is very busy otherwise.
नहीं, गॉड इज सो काइंड। अभी रसिक भाई क्या है, मार्केट भी अच्छे चल रहे हैं, सबके पैसे बने हैं। मैं सिंपली एक ही चीज बोलता हूँ कि अगर आपने पैसा बनाया है तो ये आपका नसीब है। मैं तो स्टॉक सबको, सारे सारे स्टॉक सबके लिए है। ऐसा तो है नहीं कि मैंने इंडिविजुअली किसी को बोला कि आप ये ले लीजिए। जो बोलता हूँ टीवी पे बोलता हूँ। अब कौन खरीदता है, कौन अपने पेशेंस के साथ में, ट्रस्ट के साथ में बना रहता है, कितने समय तक रहता है, ये उनकी काबिलियत है, मेरी नहीं। आपकी, मैं तो हमेशा बोलता हूँ, आपकी किस्मत में पैसा कमाना लिखा है, आप ऊपर वाले से लिखवा के लाए, तो आपका तो बनना ही था। अगर मुझे ईश्वर ने उसका जरिया बना दिया या निमित्त बना दिया, तो आई एम ग्रेटफुल एंड आई एम थैंकफुल टू यू एंड गॉड दैट मुझे वो चांस मिला. बट नथिंग फ्रॉम माई साइड, इट इज मार्केट्स एंड इट इज योर लक which is making which that's why you are making so much of money. And I hope कि इंडिया का टाइम जो चल रहा है चलता रहे और चलेगा भी. आई एम वेरी कॉन्फिडेंट. और इसलिए मुझे बार बार सबसे ज्यादा सवाल जो स्टार्टिंग में आया कब बेचना है, और पता नहीं, मतलब मैं एक चीज बोल सकता हूँ, आज तो नहीं है लेकिन लाइफ में कभी वापस मार्च 20, आप लोगों में से काफी लोग होंगे जिन्होंने फरवरी मार्च में मुझे देखा होगा 2020 में. फरवरी में 2020 में मैंने बहुत चिल्ला चिल्ला के बोला कि नहीं लेना है, नहीं लेना है, नहीं लेना है, खून के आंसू पीने पड़ेंगे, घर बार बिक जाएगा, कोई एक शेयर नहीं खरीदेगा. अगर वैसा टाइम आया तो मैं पक्का बोलूंगा, आप इतना भरोसा रखिए. लेकिन मुझे जब तक वैसा टाइम 2-5%, 7-8% के करेक्शन के लिए मैं आपसे खरीदने बेचने का वो नहीं करवा सकता, और वो आपको ट्राई भी नहीं करना चाहिए. हाँ, कोई एकदम रिवर्सल जैसा हुआ, बड़ा हुआ, तो हम डेफिनेटली आपको बोलेंगे. तब तक आप इन्वेस्टेड रहिए, उसी में बड़ा पैसा बनेगा. चिंता.
Thank you,
Thank you, sir.
thank you, and we will see you back, all the audience, in next masterclass in next month. Thank you,
Thank
Anil.
you. Bye bye. Thanks.
Thank you.